Good afternoon, all dignitaries and participants. With great joy and immense pleasure, I feel privileged to extend my warm welcome to all present here for the day 6 of the ATL online 6-day faculty development program on Industry 5.0 for management, human-centric innovation and sustainable transformation. Today's first session is on the topic Financial and Risk Management in Industry 5.0 by Dr. A. Senthil Kumar. I am honored to welcome Dr. A. Senthil Kumar, Assistant Professor in Finance and Accounting at the Indian Institute of Management, Ranchi. It is a great pleasure for me to introduce him. Dr. Senthil's academic journey began with a solid academic grounding, earning a BCom and MBA from Bharatiyar University, Coimbatore. He has obtained his PhD from Anna University, Chennai. His doctoral thesis in finance received the Best Management PhD Thesis Award from Coimbatore Management Association. He has around 23 years of academic experience in finance and accounting domain. Prior to his current assignment, he was with Indian Institute of Management, Bodh Gaya, Bihar. In his former employment at Amrita School of Business, Amrita Vidyapidam, Coimbatore, he rendered administrative services such as Vice Principal and School Executive Committee Member, PGP Chair MBA Program, and Area Chair Finance. Dr. Senthil is an accomplished researcher whose work has been published in numerous prestigious journals. His research interests include connectedness among financial markets, ESG investing, green and sustainable finance, portfolio optimization, and financial time series econometrics. He has been awarded with Chancellor's Publication Excellence Award from Amrita Vishwa Vidyapidam in 2024. He has been the chairperson, Finance and Accounting Area, and member, Academic Council, Indian Institute of Management, Bodh Gaya. Dr. Senthil is involved in various management development programs, including the MDP at Indian Institute of Management, Bodh Gaya, for senior officers of the Government of Bihar. We are proud to have such distinguished academician, eminent researcher and administrator amongst us today. I now invite Professor Dr. Senthil Kumar to enlighten us with his valuable expertise.
Thank you, sir. Hope I am visible and audible.
Yes, sir.
Thank you for the introduction. Let me share my screen to discuss on the topic Financial and Risk Management in Industry 5.0. So my warm wishes and good afternoon to all the participants of the FTP session, and as well as my appreciations to the organizers for arranging these kind of sessions, which will be of definite relevance to many of the academicians and as well as industry. So with this brief prelude, let me start my presentation. You are welcome to put those questions at the end if there is any query that you want to ask me. Let me share my screen. Can someone confirm whether they are able to see the screen with my slide, opening slide?
Yes, sir. Your screen is visible, sir.
So the discussion is about financial and risk management in Industry 5.0. And To have a quick brief up on this Industry 5.0, which is in the, current focus. I'm sure the earlier sessions would have given you a good overview about how the industry versions have oriented itself right from the 18th century till the 21st century and ongoing, which we call it as the nomenclature, how it evolved over time. Let me also give my perspective in that, even though it could have been covered in other sessions, and then we will move into how this Industry 5.0 embedded in the finance and risk management is shaping the present and as well as the future. And in fact, we will see that the touch point of this Industry 5.0 in our everyday life. And the beauty is that we may not be realizing that we are being influenced by Industry 5.0, but on a daily basis, we see its impact. It all began with the mechanics, I would say the mechanical loop in 1784, which we call it as the industrialization process, Industry 1.0, where the natural resources were the very, base, that is the water and steam. And mechanics were given the impetus. And that was completely changing the way the world was functioning. And many, I would say, the time taken for moving from Industry 1.0 to Industry 2.0, where the energy is not necessarily from the water and stream rather than from the electrical power, right? So it took almost close to a centenary, right? Almost 80 to 90 years it took for the firms to respond and the civilization to adapt the Industry 2.0, which is largely in terms of the assembly line, where mass production was possible with the intervention of electrical energy. And Industry 2.0 again posed certain challenges in terms of the workers' fatigue. The overheads were, shared by large number of units produced, but in a sense, it also created a fatigue among the workers. But then, still, that was a kind of a better option, considering the kind of mechanical involvement or the huge mechanics that were involved in Industry 1.0. The electrical energy was a bit better for them. But that also led to another thing later, not immediately, but a century later, in terms of the global warming, excessive use of electrical energy. Now then, but then in the early 19th century, that is during 1870, it was not a big issue by that time because the environment wasn't yet polluted by the mass production. Now, moving into the 20th century, where we can see the Industry 3.0 progressing, which again took almost, somewhere around 90 to 100 years for the Industry 2.0 to evolve to 3.0, where the electronics was getting replaced, was being used in lieu of the electrical energy. So we can understand the water and steam and the mechanization was the base that started in the 18th century, which moved into the electrical energy focus and assembly line in 2.0. And then it moved into the early, I would say the late 20th century during 1969, where largely the focus was on the programmable logic and the control, right? So the mechanics were controlled largely by the programming logic rather than by any other forms of energy. So that is the time when the boom started in terms of the electronics, the information technology systems, and all the program automation started to happen. So rather than program automation, it was mostly the production automation, which was the earlier stages of what we are experiencing today. So that, of course, gave an eye-opening that machines could also be controlled by the electronic circuits, and therefore the programs and the logic control is the key, which can unleash many, things that are understood yet by that time. So that, in fact, we can see that the Industry 3.0 with the, implosion of the electronics and IT systems slowly paved way for the IoTs later, Internet of Things later, And you can see the shift from the industry 3.0 to industry 4.0 is not like 80 to 90 years or close to a century, right? Like moving from 1 to 2 to 3, it happened so. So from 3 to 4, it was a quick and a swift move. It only took around 30 plus odd years to move from the 3 to 4, industry 4.0. So where the focus was largely in terms of how the cyber and physical systems can be integrated. So the physical systems and the electronic, circuits, how they are interconnected. So that is where the IoTs came into picture. Then robotics and AI started moving in, and because of this, because of the programming logic, and because of the infusion of cyber technology with physical systems, data started flowing in, meaning the data was already there, but it was not captured or it was not considered as a data itself. So with the granular focus, data started flowing in, and therefore there was a need to use the data. Or I would say that time, till that time, I would say that the data was not the, new oil by that time. So people started thinking, or the businesses started thinking, how they are going to store the data and how they are going to use the data, because large chunks of data are lying there, and therefore how they are going to make sense from the data. So therefore that brought in the concept of the cloud computing, because the storage of the data in physical form was a bit challenging, physical devices form. So the need for the big data and cloud computing became more prominent during the early 2000s. So, but then the question is, how are we going to go from here? Right? From there, where we went on is to move into industry 5.0, where we can understand like this 5.0 is a concept that we are discussing at present, right, in the last couple of years. So which means the transition from 3.0 to 4.0, it took only around 30 years. But whereas from 4.0 to 4 or 5.0, it is under, I would say less than 2 decades, right? So by early 2020s and itself, we were talking about the industry 5.0, and now it is gaining more traction in both academia and industry. So which means maybe the 5.0 or to 6.0, it may not take so much time. It might be even lesser than that. So what is that we are now looking at from the industry 5.0 focus? Well, we are extending the cyber physical systems into the human computer interaction, right? So that is where the 5.0 pitches in. So rather than the machine and the cyber systems, it is now the man, machine, and the cyber systems. So that way, it is the human robot co-working and the bioengineering and as well as the bioeconomy focus is what, right? So therefore, the knowledge economy combined with this bioeconomy is actually giving more industry focus in industry 5.0. So where the robotics and AI, which is there already in 4.0, is also now applied in 5.0, but with applications that were never thought of in the early 2000s, right? And the focus now is from 1.0 to 2.0 to 3 to 4 to 5. We could see like one item was now missing out, that was about the environment. So the concern about the planet Earth and the concern about the renewability of the resources was not a focus. Because it was considered to be a kind of abundant supply of natural resources at one point in time. But now we are understanding, like with the speed with which the acceleration is happening in industrialization is really causing a concern and has caused a concern in terms of the sustainability of the continuous availability of the resources. Until we find an alternative, either the same planet or a different planet, the focus will be in terms of sustaining what is already there in the current planet Earth. So therefore, the renewability, then sustainability is given a major push, right, in this industry 5.0 along with the growth. So therefore, the bionics is also growing, right? So maybe in the next, 10 to 20 years, we can see a lot of, automation, extension, and robotic arms, and full robots might be working in the factories, right? Which of course have started. We can see such kind of future already in certain industries like logistics, right? Amazon warehouses, where a lot of shipments are now automated, right? And the gigabit factory of Tesla, where the bionics are put into extensive use. So likewise, some industries have already pioneered in this particular bionics and robotics, but you can see like its applications will increase with more industries which were very traditionally human oriented, or maybe you can say the physical oriented, moving into this kind of robotics orientation. Possibly it may not take too much time, but we can see in the next 10 years we can see visible things happening, right? So in a sense, we can see some of the restaurants now in India, right, are utilizing this robotics, facility where the robots are now used as a service. Maybe right now they might be using it as a kind of appeal, right, as a kind of signal or a token of their advancement in, the customer experience. But probably after 10 years, you will see like many hotels and restaurants are actively using them even in the kitchen. We never know, right? So in the ways that we can't imagine right now with the current limitation on our imagination. So if this is going to be the thing, then what is this Industry 5.0 promising to the humankind? And where is it going to take us further, right? In doing so, there are many things that all will have connections towards the business. So that way, in business, how is it going to have an impact? And in the daily life of the humankind, how is it going to impact? And particularly, the focus of the day for this session would be how it is going to have an impact on the specific domain in business, which is called finance, right? So that is the whole idea. So thereby, 5.0, there you can see there are three forces that are fusioning into this 5.0, Industry 5.0, where it is the human AI collaboration, right? So no longer it is human computer collaboration, it is human artificial intelligence collaboration in the core philosophy. That is number one. And number two, the focus is now shifting from efficiency to resilience. So how quickly you can, come back from any setback, right? There is resilience. So from efficiency to resilience, and of course, customization and personalization, right? So personalizing the experience is now a big thing for many businesses. So that way, shifting from the efficiency to resilience and as well as the personalization. And in doing so, one cannot forget that all these things has to happen in a sustainable and consistent way. So therefore, the Industry 5.0 efforts and its impact in business should be in alignment with the ESG. That is about the environment and the social and as well as the governance aspects. And it should end up with the not only creating value for the business and shareholders, but also to the society. So that way, the alignment with ESG and social value is also a major, a factor for the Industry 5.0. So it could happen only when there is a kind of symbiotic relationship, right? A symbiotic relationship between the humans and the technologies that are enabled by the AI, right? So given this, which are the industries that are broadly applying these applications right now, right? Are like, you can see like the travel, right? Industry is using, right? To get the personalized recommendations for your travel, right? Which continuously and regularly tracks you across, right? So, but again, there is a question that is coming up. When this Industry 5.0 is reaching its peak, then privacy, right? Privacy would only be a kind of perception, I would say. It will only remain in your thoughts. But then the information privacy, maintaining that and still getting a customized service, for that we require very strong security protocols, right? And if security protocols are going to be a cause of concern at this moment for information privacy, then we really need to think when the quantum computing is going to become a reality, which is already becoming one right now with the Google's Willow or with the Myrana of Microsoft. But the point is, when it becomes a kind of a mass production concept, and when it is into any advanced systems, that is quantum computing, then the security protocols really what is we are having now might become outdated. So in such a case, how is that the data which is going to be more customized, insightful, and yet remain private is a big question mark, which many regulatory bodies are really thinking about at this moment. So travel and fashion, right? Fast fashion is a cause of social concern. But again, fashion is something hugely influenced by the AI application. Food technologies, that is really, witnessing the AI applications, and which is a welcome thing also. But again, not in terms of the bioengineered food, but ideally in terms of finding the new ways to, to retain, the freshness of these fruits, or even in terms of DVDing, or in terms of ensuring like the food is, retains its nutrition value. And healthcare, which is in the very front itself, in the industry 4.0 itself, healthcare was a beneficiary. But now with the quantum computing and the potential AI, you will see like the time taken for the idea to become a kind of IP, and that IP becoming a kind of commercial product for the healthcare, the duration is really, really reducing, right? And of course, the hospitality industry, which I told you, right, are really looking at ways where they can embed AI in personalizing and customizing the user experience. And the beauty is that the legal business is also witnessing the Watson AI is now becoming a kind of go-to for many international law firms, right? And IT, which is the harbinger for this AI. And you can also see the real estate getting benefited, and the logistics and transportation. They are able to really track the movement of the vehicles, and as well as the manufacturing, which we will also be discussing with some Indian cases, right? So all these things have an effect in terms of the value chain. So businesses are really looking at how the value chains are going to improve because of the usage of AI and robotics. They are also at times there are also some concerns. Is AI a fad, right? Because in the last couple of years, right, particularly after the OpenAI brought in the generational AI, ChatGPT, the idea of looking at the AI in business has become more, imperative. But at the same time, the question is also now raised: had we really seen any return on investment because the AI investments have been happening, right? There are some naysayers for that, and there are some believers also, which means we are yet to make a decision. We are not there yet. But at the same time, companies which are investing in the AI right now will have an advantage possibly in the future. So it is about the hope of the future that the companies are really investing in, where they don't have enough data to show that there is any immediate return on investment from AI. But it will soon become a kind of hygiene factor, if not motivational factor. Meaning the presence of it may or may not give benefit, but the absence is going to devalue the businesses in the future when the competitors are innovating. So now, given that, let's look from the financial angle point of view. So how does all these interconnections does have an impact on the finance and the risk management from the industry 5.0 point of view? So when it comes to the risk, right, the uncertainty about the future outcomes, right, and the uncertainty, or otherwise we can say the variation of the actual outcomes with the expected outcomes, all we can combine them and call it as a risk. So when it comes to the business risk, right, when it comes to the total risk a firm faces, financial risk is one of them, right? It doesn't mean that only thing is the financial risk, but you also have the market risk, the product market risk, the legal risk, right? And of course, you have the operational risk in terms of your business operations. And with the kind of global political uncertainty, right, you do have the supply chain risk also, the raw material risk also. When Iran is having its border issues with Israel, right, or with Iraq, or with any country in the world, you could see that the Horn of Africa, right, that particular strait is under attack, which literally means that there is a possibility that Iran will be able to close the location where there is that particular narrow channel through which almost half of the world trade is happening, which literally means that there will be shortage in raw material supply, not because the natural resources are at limit, but again, because the maritime transport is at risk because of the war with Iran, right? But this again puts the challenge in terms of the raw material inputs, right? The instability in that, or possibly the Russia-Ukraine war could lead to uncertainty in the supply of the natural resources, right? So which means the energy prices will go for a tailspin. So which literally means that the input risk is more pronounced right now, right? Even though the possibilities of World War III is not there, but still the uncertainties that are surrounding the maritime transport and as well as the raw material supply is really posing an impact on the supply chain risk management. And of course, you have the tariff impact, right? So the uncertainty surrounding the US tariffs, right? And the retrospective effects of many governments imposing the tax rates, right? They also provide an impact on the tax risk. And the regulatory risk, right? All the things what we are discussing will be also linked to the regulatory environment, right? The environmental laws or the antitrust laws, or possibly the data protection acts, right? So which India is also grappling right now with the Data Protection Act, where European Union's GDPR, Global Data Protection Rules, in fact, have been more advanced. So that way, the information privacy and as well as the data protection regulation, all these things, right, do have an effect. And you can also see from 4.0 industry to industry 5.0, there is also a rise there is also an increase in nationalism, right? There is an increase in nationalization of resources rather than the globalization. So that is also a fact that we need to consider in terms of the regulatory risk and as well as the product market risk. Now, if this is going to be the kind of risks that businesses are facing, how could the industry 5.0 provide solution for that, right? So that is a bigger question to be that remains to be answered. Well, to add to this, claim about the risks faced by the business and the impact it is creating, let's also look at another statistics or another way of presenting with the heat map. So this is a heat map about various events and its impact in different industries. So from the previous slide, we understood like all firms, irrespective of their origin and destination, will face those risks. But let's now look at the risks and their impact, which is again a kind of score provided by the KPMG consulting firm. So if you look at the global, political aspect, US election could be one, influential factor. And then the crisis that is actually brewing in the Middle East will have an effect, as I told, in terms of the oil and energy supplies and as well as the transportation and logistics. So if you see the color red gives you a high alert that this particular issue or a factor will have a huge impact on these industries. Like, for example, if you look at the Middle East crisis, the consumer and retail, energy and natural resources, and the governments do have a huge impact, right? They get affected very seriously. But among all these factors, like the nationalism that is happening around and the China's growth or the sluggish growth in China right now, what we are witnessing, and the raw material, that is rare earth minerals. The rare earth minerals is a major cause of concern. Why? Because it is having an effect on the chip making, right? For the chip making, you need the rare earth minerals. And if these rare earth minerals are in short supply, either it is because of the natural short supply or man-made short supply, it will affect certain industries. For example, the automobile industry with the electronic vehicles, they need the chip. And the electric vehicles, they need the battery, and for which they need the lithium. And therefore, they need the raw materials. So all these raw materials which are used in this automobile industry, right, for the electric or electronic vehicles, do have the need for rare earth minerals. If China is going to put an artificial, overture on not providing them, or if African nations turn back, right, then obviously the effect will be on these industries like energy and natural resources, government, infrastructure, and as well as the industrial manufacturing. In fact, at one point in time, when the Taiwan Semiconductor Corporation, TSMC, in Taiwan, when they were not able to supply the chips, many of the Indian automobile manufacturers, right, they have to halt their production because of non-availability or shortage of chipsets, right? So that is the kind of impact we are experiencing in a world which is interconnected for the supply chain. And the global economic uncertainty, then I would say the issue about the environment, right? And as well as the corporate culture, all these things. So among that, you can see one area, one column is very seriously witnessing reds and orange, which doesn't have a green at all, which means this will have an effect or an impact on all the industries or on all the concerns, right? So therefore, it is either a high alert in most cases, or the remaining would be moderate alert, right? Which is, if you see the ungoverned AI, if you look at the ungoverned AI column, you could see that it is either red in all cases, except in two cases, it becomes a moderate impact, but never limited impact, which means that if the artificial intelligence, right, usage is left ungoverned, it is going to be a kind of catastrophe, right? In all the kind of technology, media, telecom, industrial manufacturing, infrastructure, financial services, energy, right, consumer retail. So you can see the penetration of this, industry 5.0 through this AI and robotics is extensive. And if it is not governed, right, that would have a serious impact, right? Which means the cost will be outweighing the benefits. And therefore, the focus could be in terms of building a robust risk management system, right? Where we inventory the risks and estimate the probabilities of those occurrence. And we also assess what would be the costs of such risks, so that you will be able to run a cost benefit analysis and then identify the ways to reduce this risk, right? And also understand what would be the cost in that will be put in effect if we have to find ways for reducing the risk, if not completely avoid it, right? So that way, in a sense, that is where again there are a lot of opportunities that are arising in both the finance and as well as non-finance domains in terms of building a sophisticated and a robust risk management system, right? So in fact, that is also a model which will enhance the firm value, right? So the technologies like SupTech and RegTech, right? The supervisory technology and the regulatory technologies which are arising through the industry 5.0, right, is really creating a business opportunity as well as a business resilience for many of the firms, right? How and where we will subsequently see in certain cases, right, in the subsequent slides. So now, given that, what is the role of, because the current discussion is not from the whole business point of view, but largely from the finance point of view. So therefore, more than the chief executive officer, let's speak from the viewpoint of a chief financial officer, right? So how does this, embed in the present and future of the CFO 5.0? Let's coin the word, the CFO, chief financial officer, in the age of industry 5.0, which is CFO 5.0. And he or she needs to be digital, right? He or she needs to be digital savvy, right? Digital CFO, where the CFOs will be largely using the predictive financial performance and appraisal analysis or analytics. And therefore, the financials more will be on the predictive note, and the real-time dashboards that can empower their quick and robust decision making. And of course, the audits obviously would be something that they will be doing on a very continuous basis, that is internal audits, right? And when that is going to be a digital savvy CFO focus, also needs to be sustainable oriented or sustainability oriented CFO, which means that allocation of capital can no longer purely be on the profit maximization and the wealth maximization objective. It has to also be linked to the ESG, the environmental, social, and governance factors. So that way, the CFOs who look at the wealth creation is also now embedding the sustainability into their capital allocation process. And is that enough? No, you also need to be a human-centric CFO. Is it like a HR and finance combination? Not in that sense, I'm saying. It is the CFO's role, keeping also in mind the humans who are involved in this process. Well, it would be a kind of, contradiction where we are saying, like with AI and robotics, the interventions of humans are reduced. But in that sense, still, with whatever, usage of the human involvement, there has to be a human-centric focus of the CFO also in the time of Industry 5.0. How? It is all the AI-augmented decision systems, right? So given all these three things, what would be the kind of risk framework or the risk management framework that the CFO should keep in mind? So that architecture is largely in terms of proactiveness rather than reactiveness, right? So it is better than to prevent rather than to handle it later. So that way, the predictive models have the predictive analytics and predictive risk models are on the rise in the recent years, right? So the predictive models issue is markets notice those impacts only after that impact has hit. But the idea of this risk management framework is even to avoid such or prevent such kind of occurrences. So which literally means that the machine learning driven EWS, that is the early warning systems, are put in place in many, industries and companies, even in India, right, where they are able to predict, right, the risk with certain probability so that the risk management systems will immediately act in even before the actual risk event is actually happening. And then the other one is the preventive one, right? One is predicting and the other one is preventive with the zero trust cybersecurity. So the cybersecurity is a major cause of concern. Why? Because no longer the wars are military, only, right? The wars are not fought only with military power right now. It is also the soft power and the cyber power is differentiating the nations in terms of their win and lose, which of course we have seen in the Operation Sindoor also. And we can also see that the risk, right, that comes through the cybersecurity are no longer some kind of, whiz kids doing that kind of hacking. It is also the state-sponsored, or state-induced cyber risks are coming up, right? And the prescriptive risk architecture is also something required for a CFO. How? Well, you can't expect everything, right, into your model. So you need a kind of a decoy, right? You need a decoy in which you will do all the kind of testing and stress testing, simulation, everything in such risk scenarios. And the outcomes and the learnings from that particular, simulations can be applied in terms of the real-time environment. So many, businesses which are more tech-oriented, right? And those who deploy sophisticated risk management systems, right? The example cases we'll discuss, as I told you, but they are now moving into the digital twin-based stress testing scenarios, right? In fact, the IMF does it, International Monetary Fund, in terms of the financial stability around the world. And many companies are also trying to do this stress testing, architecture implications where the digital twins are bought in, which means it is the digital replica of the real event in which the stress testing continuously happens. And the outcomes and the learnings from those, replicas, digital replicas, are then shared back as a kind of feedback loop to the real-time, environment. So that helps in kind of giving a prescription about the risk management, which can, in fact, predict those possible outcomes and also prevent them by predicting. So this risk management architecture is something more robust when you're talking about the financial technology space, the fintech space. Now let's look at the major fintech development trends, right? Which this is going to be the case, then the financial services industry is, more seen as a vulnerable place where such risk management frameworks are really, really required. So if that is the case, then what are the major trends in the next 5 years that is going to warrant the implications of the Industry 5.0? One is as far as the AI, its direct implications, right? You can understand like the most relevant effect, right, could be seen in the blue color, right? If the bar length is a bit higher, it indicates that the impact is relatively higher, right? So the AI applications in finance, right, is the largest share happening. And then the regional interoperability, right, of the fintechs. And for example, UPI, right? The UPI has been a raising success in India. And in fact, we can proudly say that we are having one of the most advanced payment technologies in the world, right? So, which is currently up and running. And you can see that the UPI has really impacted the ways through which where the interoperability between the, pay wallets are possible, right? Rather than like WhatsApp, where you can, exchange messages only in the same platform. What if you can send WhatsApp message from WhatsApp to another app, to Insta, right? Or to Aratai, or from Aratai to WhatsApp. Now that becomes more interoperable, right? Likewise, the now the interoperability is also going beyond the payment from Google Pay to Phone Pay, but rather than from India to other country also. So globally, you can see the implementation and the embedded finance, right? The what you call it as a decentralized finance or DeFi is also having an effect, and the open banking or open finance, where many a times you can see that you are availing a service and you are asked to pay. And when you have to make payments, say, for example, even if you're paying the tuition fee for your school children, right? Earlier, you used to pay directly through a check, but now you are always having a standard screen which you can see in most of the cases. Either you are paying the fee or you are paying the insurance premium, right? Or even when you are paying for your credit cards or even in Amazon, right? So you can see like there is a standard page where it asks you whether you want to pay through credit card or debit card or pay wallets, right? How is it possible? Through the open banking, right? And in fact, the traditional banks are also now, integrating themselves into the open banking and open finance network, right? And the big data and cloud solutions, and the next big thing for India beyond the UPI is going to be the blockchain, right? The blockchain technology and the DeFi, which I told you, which is decentralized finance. And then the sustainable and green finance or climate finance is also, happening thing. And the central bank issued digital currencies. When you have the Bitcoin or when you have the Ethereum, the question is, the question is, it is all privately supported. But what if the regulator themselves issue a digital currency? Then you have the CBDCs, that is the central bank issued digital currencies around the world. So thereby, the major fintech or the financial technology developments, right, that are going to have an impact through the industry 5.0 or all these things which we have listed. Now, given this, how are we going to ensure that the risk and the fraud and as well as the cyber risks are all avoided and managed, right? So integrated risk management framework that will in fact be based on the governance structure, right? And then the other one is also the prevention aspects, right? What kind of, protocols do you have in preventing them? And also important is how do you detect them, right? In terms of the fraud management policy, in terms of the customer identity, in terms of the transaction monitoring, and as well as what would be your first response to such kind of, risk scenarios. So what are your go-to playbooks which are in your company for your fraud responses in terms of forensic investigations or in fact of reporting to the external authorities, right? And when you have this responses, detection, prevention, governance, everything, what is going to be the resilience, right? How quick you are going to recover from that setback and then restore your regular businesses, right? As it has been. So in the recent days, in the last, I would say a fortnight, you can expect that most of the world operations in the cyber technology went for a halt, right? Even Amazon's AWS, Amazon Web Services, their AWS went for a halt. And in fact, that had a huge impact on the way we do our daily transactions. So that way, the restoration of any setbacks, if there is a kind of cyber attack or if there is any the cyber fraud happening, so how resilient you are and how you are able to quickly restore the regular business operations, and then how you are going to review and update your cyber and fraud risk management frameworks, right? So this is going to have a big business opportunity for the firms which can provide such integrated cyber solutions, and the businesses will really be actively involving themselves in adapting them. Why? Because regulators are wanting it. For example, sometime back, there was a concern that WhatsApp was asked to host its data centers within India. And in fact, Indian government is very particular that the data storage should happen within India for their service providers. Of course, Arata is one of them. But apart from that, but WhatsApp was not willing to do that. But this, they both have, there is both the company and as well as the government will have their own reason for asking them. But the question is, the recovery and restoration would be, would be quick if it is going to be nationally centered. But the companies are also having a concern, because if it is locally centered, it will also compromise on the risk, on the security aspect. And the second thing is, it will also put them into a kind of loggerheads with the local regulatory authorities. If the data center is in India, then the Indian laws will apply. So therefore, the data sharing from the company to the government on certain cyber cases will be different than when it is located in US or other countries. So now, therefore, the cyber and fraud risk management in the financial services or even the other industries needs to have an integrated look. And given that the privacy and compliance by design, right, has to be, are increasing in terms of one is the product life cycle, right, the PDLCs, product development life cycles, and in terms of the fraud detection capabilities, right, and the incident response and resilience, that is what you call it as a fault response, protocols. Then the focus is on the AI observability and as well as AI ethics and supply chain risks, right? And the safeguarding the customer and as well as the transaction data of the customers. So all these things now become more and more, I would say, integrated and embedded in terms of the security compliance and risk management. Now, given that the payments, right, and these the payments industry in the inside the fintech, right, their security and resilience is a big question. Why? Because of the state-sponsored attacks on the payments channels, which of course is a major thing, because by the time the Operation Sindoor was open, right, there were a lot of cyber attacks. There were a lot of attempts on the Indian installations and as well as on the Indian payment architecture. And before the government even moved on with the Operation Sindoor, they ensure like all the security protocols are put in place for the digital infrastructure of India. So the entire DPI, that is the digital public infrastructure, right? The data infrastructure of the government of India was I would say the focus was in terms of rescue and as well as recovery, and most importantly the prevention, right? The AI, the attacks, and in the future it could be AI agent-based attacks also, right? And the frictionless payments that could happen potentially. So therefore, the risk analytics, right, would provide the right interventions for the kind of payment security that is under question, right? And what is now called on is a kind of collaboration across the companies in the same industry, right? So like CIBIL, right, the CIBIL score. So which is basically it is a credit information bureau of TransUnion. But the point is, when you are looking at a system where all the banks and financial institutions, particularly the banks, are going to join together and share their credit records, right? Share the credit history of their, loan customers. that provides a kind of coordinated focus in terms of the maybe we can say the credit risk aspect, right? So if such kind of things can also be brought in terms of the cyber security and risk management among the businesses, like a kind of civil approach where an industry-wide collaboration on the fraud intelligence is being put in place, that would in fact reduce the cost of, I would say, the resilience for many business firms, right? But again, that is now more on a fragmented basis. If that gets coordinated or consolidated, then you can see like the combined might will have better data for the detection, prevention, and recovery. So that again puts the question in terms of the digital public infrastructure which India is maintaining. So what is that India DPI layers that provide the scope for these protocols, right? So that is where you have this India DPI layers, which is largely based on the 4 layers. One is the identity layer, where we have the Aadhaar to validate it, and you have the payments layer, where you have the UPI and e-Rupai, right? And then you have the consent layer, so where it is the account aggregators who play a major role, and the commerce layer, where you have the open network for digital commerce, which is the ONDC. So this put together, we call it as India stack, right? So this India stack, in fact, is giving you, of course, if you want to have the application programming interfaces, the APIs to connect through, right, these layers. And the government of India is also having this eSetu, right, where you have the API openness also. So put together, when you have this layers of the what you called as the DPI rail gods, right, for the data exchange, for the payments, for the identifiers, for the enablers and aggregators, and as well as the DPI principles, then you can expect that the financial data and as well as the risk management protocols for the through the industry 5.0 is quite possible. Now let's also look at what would be the Indian use case for the value chain through the industry 5.0, which is largely based on the cybernetics and the AI and ML in terms of robotics, ESG, and as well as the digital infrastructure. So when you look at their applications, right, when you look at their applications in manufacturing, this could potentially turn into smart manufacturing systems. And in terms of the banking, financial services, and insurance, right, you have the digital credit lending, which literally can have a benefit in terms of the credit risk management. And well, if you look at the supply chain resilience, you have the robust supply chain resilience models that could essentially be linked through the AI and ML. Now, that brings us to the question, which are the companies which are already benefiting through the industry 5.0, right? And how does this finance and risk management synergy that happens or that is brought through the industry 5.0 is visibly seen in some companies, right, which are well-known brands in India. Let's look at their cases from the Indian market point of view, which is the synergy between the finance and risk management with industry 5.0. The first one is about the Tata Steel, where you have, where the company has witnessed an AI-powered operational and financial transformation. So how they deployed these, Industry 5.0 framework to optimize its blast furnace and coke plate operations in terms of the Tata Steel. So whereby the advantage is that we directly impact the capital expenditure, the capex planning, and allocation of the energy cost, and as well as measuring and validating the sustainability linked metrics. So this helped the Tata Steel to reduce the coke consumption per ton, which literally means their input costs are going to reduce. And of course, maintain the stabilized furnace performance, right? So how does it connect with the industry 5.0? Well, it doesn't replace the operators, but rather it augments the operators. It pools their resources. And the other one is it improves the sustainability because the furnace performance is stabilized, so it doesn't overuse, and thereby and thereby reduce the emissions. Is someone having any question? I see there is an overtalk. Yeah. The third one is, of course, and the third one is, of course, the resilience in terms of the predictive risk mitigation, right? And perhaps it really integrates the finance and energy cost dashboards for the CFO's decision making. How? Because they are enabling this transformation with the AI-based predictive analytics in their production shop floor, right? And this, of course, helped in optimization of their coke rate, right? And between 8 to 12% reduction in the energy cost per ton. This will, of course, give them the kind of carbon credits, right? And it also augments the CFO for real-time decision making with operational data. And perhaps this also helps in the business responsibility and sustainability reporting metrics, which is imposed by the Securities and Exchange Board of India when the financial data is reported in the annual report. So it supports in one way for achieving the green finance targets, right? So here you can see there is a kind of human plus AI interaction, the operators plus AI recommendation in the Tata Steel. But then it is also raising some questions. How does this analytics, they help in improving the FP&A, right? And what kind of risks, risks will arise when the AI is involved in managing the capital expenditure, which is called a CapEx, right? Or the routine maintenance. And well, can you tie the operational data towards the financing, which is embedded through the ESG? If your green financing and the operational aspects of business, can they be tied up? If so, what value it can create to the customers and shareholders, right? So that is one set of question. And the another one is, let's also look at how this is about a manufacturing use case, but how about the services, particularly bank? Well, HDFC Bank is a bit advanced in terms of this risk management architecture, where you can see the early, detection, right? The early warning systems red flagged through the AI intervention for managing and regulating their credit risk, right? Which HDFC Bank has used. And they are well known for their rich tech, that is a regulatory technology adoption. So in fact, they have implemented the EWS that can really look at the transaction patterns of the customers, the users, then the GST filings, then the salary flows of their customers, and as well as the behavioral or the qualitative, variables of the users. But then how does it help? It helps to detect the borrower stress, right? The stress of the borrowers, in the sense, the financial distress of the borrowers, well ahead of any legacy model that is best in class right now, right? So thereby, around 200 plus variables are being captured, knowingly or unknowingly, right? The cash flows, the GST spending or the GST payments, right? All these things. And how does it help? It helps effectively the business, that is HDFC, in getting an alert about the likely happening of a non-performing asset, that is NPA, right? And which means that even before the customer realizes that they are potentially going to get into a financial distress, HDFC comes to know that. And how does it help? Well, it can help in reducing the potential NPA by intervening in the beginning itself, and then it also reduces the restructuring cost, that is the debt restructuring. And that helps the relationship managers, that is RMs, their dashboard will get integrated with this AI score, plus their own qualitative insights about the customers, right, about their borrowers. And this helps in the targeted borrower engagement. At the same time, it helps you to analyze the portfolios at a very granular level, right? And perhaps this is also in terms of the digital lending norms imposed by RBI and risk governance norms. Now, every bank is supposed to report their, financial metrics and leverage, right, as per the Basel norms, right? So that also helps the HDFC Bank to draw the inputs or insights from their AI dashboard, right, for credit risk. And that way, it flags the declining cash flows, lower salary limits, higher ATM withdrawals, likewise, so around 200 plus indicators. And how does it align? Well, it aligns with the decision making and the human judgment, and also it supports financial stability and inclusive finance, right? So human machine intelligence, right, is becoming more hybrid right now with resilience. Therefore, the question is, can this be extended for all banks, or should banks prioritize the AI indicators over the traditional credit scoring, like the CIBIL score or any score, right? Are we too early to make any decision that way? Or how can the model governance prevent the biases? For example, when Apple came out with their Apple credit card, right? When they partnered with Goldman Sachs for issuing cards, there were allegations that the recommendations for granting or not granting the card were a bit racist, meaning their AI models were having certain bias in terms of issuing credit cards or in terms of setting the credit limits for borrowers of African American origin, right? So there were certain discrimination, and there were certain discrimination from their models in terms of assessing the credit limit for the men versus women. Now they are all, I would say, in the early stages of model development, but there are possibilities that there could be certain bias and false positives also. False alarms could also be raised if it is completely into the AI indicator. So therefore, how do the businesses or the financial institutions do the model governance so that these biases, either it could be completely avoided, if not, at least that bias is kept in control, right? And thereby, how the credit risk teams, which are now operating in businesses, right, in financial institutions, right, what is going to be the upskilling and reskilling that is required or that is expected for the future? So, put in other way, what should be an MBA finance student be preparing himself for a career in HDFC, right? In terms of the credit risk. So what is going to be the talent implications for the future? Well, we need to think about it. And let's also look at another one, but these two are big firms. But what about the medium, small, and micro enterprises, the MSMEs, right? How does this MSME, how does the Industry 5.0 has an impact on the MSME? Now the question is, MSMEs are one of the segments where the financing is a challenge, because the big firms, right, they have a healthy balance sheet, they have indicators that are supporting reduction in credit risk, and therefore their cost of financing and as well as their access to finance is a bit higher. In the sense that their cost of financing is lower, but their access to financing will be higher for big firms. But what about the small firms, right? So what kind of support does this, embedment of the technology through Industry 5.0 provide for MSME? The answer is ONDC, right? Looks fine in terms of open network for digital commerce, right? MSC financing via open commerce, whereby they enable the integration of sellers, logistics players, and buyers, right, to interoperate across the platforms, right? So now, in a sense, how does this particular network work, ONDC? Every order creates digital transaction trails, right? And then that gets into the account aggregator for the lending models. And then the cash flows of these MSMEs, cash flow based loans projections, right, are possible without even having any collateral for this. And in fact, the financial services firms which are going to fund these MSMEs likely to, they analyze these real-time order volumes, return percentages, just to understand their regularity in sales and sales returns, and the payment cycles, the settlement cycles. Well, how does it help? It embeds the credit products, right, and reduce the working capital shortages for the MSMEs. Now, this is a major breakthrough. In fact, if you look at the another one, which is TREDS, right? That is again a platform where the working capital or the bills discounting is enabled, right? Where the financing largely for the MSMEs are enabled through this TREDS platform, through the receivables management models, right? And that is also empowered through the UPI, whereby the working capital loans are now enabled, including this ONDC and the TREDS, where the small companies can very easily access the capital without having any collateral necessarily, but their bills receivables or bills payables itself become the collateral, right? This is a bit different from the bills discounting what we have heard, because the payments are happening based on the UPI, immediate basis. And then this is why a breakthrough, because the MSMEs, they contribute, right, 1/3 of the GDP. But then their formal access to credit is very severely limited. And this ONDC, they provide that, the problem, what you call information asymmetry, because you don't have sufficient data about the credit risk possibility of an MSME. Now, with this ONDC, with the integration of all these order transaction to order matching and account aggregation and settlement cycles, now the fintech services firms are having enough information to judge on the loan requirements. So that way, that information asymmetry is now becoming information symmetry. And lenders now, they can price their products, loan products, to these MSMEs in a very dynamic and a low cost way, because the risk is reducing because of access to information about the client. And therefore, when the risk is lower, the risk premium on the cost also reduces. Now, this puts us into the question in terms of what helps, or what kind of breakthrough that does it, provide. Well, it also opens some questions. Will open networks reduce the risk asymmetry for the MSMEs? Yes, to some extent it is. But then, can such models help in replacing the collateral-based lending entirely? I don't think so. But the point is, we really need to look at, right? We need to really look at whether the collateral-based lending or the information-based lending, which is going to, sustain in the future. And if we are going to be more on a kind of, the ONDC-based working, MSME lending or MSME financing, then what kind of new risks that are going to arise from the digital fraud and data quality issues, right? So, well, these questions remain unanswered, and at least it provides more research opportunities for us to look at. And let's also look at another case situation, which is Maruti Suzuki, where the digital twins for supply chain resilience has been put into action, right? So the digital twins, what we said, is a digital replica, right? So how does it work for Maruti Suzuki in terms of the Industry 5.0? So if you look at the supply chain resilience, it is a very important aspect. Why? Because their massive vendor network. Of course, Maruti Suzuki goes for just-in-time, right, JIT manufacturing, but then their vendor network, it relies on complex logistics, right? So if there is any disruptions, right, either like a pandemic or a chip shortage, what we discussed from the Taiwan, or any, uncertainty, or even the tariff wars, right? But of course, now the automobile industry has benefited largely through the GST rate revision. But I'm talking on the negative side aspect. If there is any disruptions or hidden vulnerabilities, they become visible, right, and has an impact on their supply chain. So what they have done, they have gone for a digital twin technology, right? It is a virtual representation of a physical object, right? That uses the real-time data which are acquired to accurately reflect its real-world counterparts' behavior, performance, and conditions. So what happens? You have a digital replica, and all the stress testing models are applied on the digital replica, and the learnings from that particular digital replica implementation is then transferred to the actual company, right? So that way, Maruti has partnered, right, with analytics firms and AI, data insight providers, right, to mirror the physical supply chain digitally. That's why it is a digital replica, and the simulations of disruptions, right, like supplier shutdowns or the logistics delays are put up in the models. And in fact, it helps in identifying what would be the delay in the availability of materials. That is, predicts the lead time variability, and it helps in managing their raw material supply or the inventory. Either it could be a raw material or a work in progress or finished goods, and helps in managing their safety stock. And how it finally helps the suppliers, it helps them with the machine learning driven insights that shifts Maruti from reactive to proactive or predictive supply chain management. And this reduces the downtime, and as well as their material requirement planning becomes more accurate and efficient. And how does this align? You can see that the AI simulation and the human planning, both are symbiotic now. And it also reduces the wastage, so it becomes more sustainable. and the vendor management and their financial stability and forecasting is also increased. And the overstocking is also reduced, right? So this helps in continuing, or it helps in planning the business continuity, or you can say the resilience and recovery is more enhanced. Now, given this, still we can put some more questions, right? So can these digital twins be the solution for the financial forecasting also? If it is on the supply chain, resilience, if it could be applied, can it also be applied in the portfolio management firms? Can it also be applied in the hedge funds, right? So what kind of risks, right, are avoided, and what type of risks are unavoidable or non-avoidable? They are all unavoidable even after the digital twin adoption. Which, put in another way, what is going to be the impact, or what is going to be the change between the systematic risk and unsystematic risk for the firms that have adopted digital twins? And therefore, should it also requires the entire vendor network to also be digitally integrated, right? So perhaps, we might look at those aspects from the research point of view also. Well, one more case in terms of the Tata Motors, right, where they are known for the EV transition in right now. And of course, they have also gone for financing, right, their sustainability linked to financing for the EV transition. So if from the point of view, how does this particular strategy of Tata for investments, sustainability linked loans, right? In fact, how does it align with the Industry 5.0? It is tied to sustainability outcomes. And the mobility, the smart mobility through the EV ecosystem is more human-centered right now. And that is also supported through the KPIs tracking. That is key performance indicators, right? Tracking is possible through this particular initiative of SSL loans of Tata Motors, right? So this helps in the emission reduction and as well as the renewable energy usage goals, all these things, which are all part of the third pillar of the Industry 5.0, that is sustainability. And this helps in supporting the zero net or a net zero vision of both India and as well as Tata's. And it also helps in rapid scaling of the EV ecosystem. So now the question is, if Tata is able to replicate this strategy in terms of financing, that is green financing or sustainable financing, can it replace the traditional green bonds, right? And what kind of KPIs, the key performance indicators that are really required to be defined over here? And can that KPI be extended to other industries also, right? And what kind of incentives are required for influencing the sustainability strategy of firms in alignment with Industry 5.0, right? So perhaps these kind of questions are quite interesting for the business researchers to really look at from the integration of 5.0 and finance. And the last case for discussion today would be in terms of the Reliance Retail, right, which is a very interesting concept in terms of the supply chain and pricing optimization with the AI, where they have built in the AI models, right? They could in fact gulp up all the transactions that are happening in Reliance Retail for their pricing, demand forecasting, store assessment, assortment, and as well as the inventory planning. So how does this help? It helps in predicting the Reliance Retail for the store level demand among the hundreds of stores they operate. And in fact, the dynamic pricing, which we can also see in the digital products of Amazon or Flipkart, when you move from one app to another app, since you have also enabled the app tracking, the feature tracking access for these mobile phones, it will also be able to see like which app you are moving from or you are moving into, and accordingly adjust the prices based on which site or which app you have visited before entering into Amazon or Flipkart. That way, the dynamic pricing is possible. But that is also raising a question of privacy. That is a different thing. And of course, it helps in minimum spoilage. And in fact, all these things will reduce the cost, the COGS, the cost of goods sold, and it will improve the margins, the profit margins. But the major impact is in terms of the hyper local logistics, right? the logistics is important in the retail, and more important is the local logistics, and more important is the hyper logical or hyper local logistics, and which is possible only through this real-time intelligence provided for retail, Reliance Retail through this AI model and pricing optimization. So that, of course, puts us in alignment with the human decision making supported by AI. So there is a fusion of the human to the AI and the customer personalization, and of course the operational cost and the waste is reduced. So that way the sustainability is ensured. But then the human intervention through the AI insights helps for better decision making, right? But then still the question is, how should the companies, right? How should they be balancing between the human intuition versus the model recommendation? Can we purely go by the AI model recommendation in terms of the pricing or in terms of the inventory? And what kind of biases that could arise, right? What kind of biases and ethical biases that might arise from dynamic pricing? Now, all of us know, now there are discussions in the parliament even in terms of, not regulating per se, but at least some dialogue has happened right now in terms of the airfare dynamic pricing, that the pricing of the tickets of some airline companies, which I don't want to name, are under the scanner, where during the festival seasons, suddenly the prices go up, abnormally higher. So now the dynamic pricing, it is based on the skimming price policy, but at the same time, there is also a bias and ethical concern when it comes to the retail fashion, right, or retail segment. And can we have any, disproportionate impact between the large and small retailers? Well, these, questions remain unanswered, and they, in fact, provide more scope and focus for the academic research even, right? So that way, the focus we have discussed is on the human AI collaboration in CFO functions and financial decision making, and how the UPI and account aggregators on MSME credit access and the AI-driven credit scoring, right, and the digital twins and the effectiveness of the sustainability reporting disclosures on firm valuation, right? And therefore, I perhaps would like to suggest, possibly the comprehensive data management, program, right, to build a basic data layer which is secure and also agile is required. And in fact, the ecosystems of the businesses have to interact with each other and collaborate with each other. And the point is the mission, human, and technology working in sync, and then designing the agile, responsible, and innovation architecture and a reporting framework, right, that aligns with the culture of the organization and as well as sustainable business practices. These are something, that are required, and to some extent, Industry 5.0 have the capabilities to support the Chief Financial Officer in fulfilling these requirements. Right? So these are my viewpoints, and that's it. I close my session. If you have any questions, well, I can go ahead.
Any questions from the participants?
Oh, sir. Sir.
Sir, there is one question from the participant. How can firms prepare financially for sudden change in demand due to customization trends?
Yeah, so that's a good question. In fact, from Sri Bhuvaneshwari, I believe. See, the point is, when you're looking at the model predictions, right? So which has been presented, which have been presented in the presentation itself, when firms are constantly monitoring the environment in terms of the market, customer insights, in terms of the changing trends, inventory models, etc., they will be able to have this kind of intervention strategies a bit in advance, right? So that the changes in the taste and preferences of the consumers could be spotted in advance, and accordingly, the firms can adapt to the changing environment. So that way, it is not only financial risk, it is also the business risk. So any early adoption of these AI models would also help the businesses in tracking the changes that are happening in the consumer trends, right? Thereby, this particular possibilities could be addressed.
Thank you, sir. Participants, any questions? Okay, sir. As we conclude the 11th session of our Atal Online Faculty Development Program, it is my privilege to deliver the vote of thanks for today's insightful session on financial and risk management in Industry 5.0. On behalf of the organizing committee, faculty, and participants, I extend our deepest gratitude to Dr. Senthil Kumar, Assistant Professor, Finance and Accounting, Indian Institute of Management, Ranchi, for sharing his expertise and innovative perspectives. Your presentation has offered a comprehensive of how financial strategies and risk management are evolving in the Industry 5.0 era, integrating advanced analytics, technology, and human-centric approaches for more resilient decision-making. Your practical examples and thought leadership have inspired us to embrace both digital innovation and ethical responsibility in managing financial challenges and opportunities. To reflect today's theme, here is a quote by Peter Drucker, renowned management consultant. The best way to predict the future is to create it. The best way to predict the future is to create it. Thank you also to our program coordinators, technical support, and all participants for their active engagement and contribution. Once again, thank you, Dr. Senthil Kumar, sir, for your valuable insights and inspiration. We look forward to apply these lessons to advance financial excellence and strategic risk management in our professional journeys. Thank you all.
Thank you.
Good evening, participants. Next, we move on to the second session on the topic Entrepreneurship and Startups in the Industry 5.0 Era by Sujita Purushothaman, Operations Director, Nexatrack Limited, Liverpool, UK. I am honored to welcome Sujita Purushothaman, ma'am. It is a great pleasure for me to introduce her. Sujita Purushothaman, ma'am, MBCS, is a hands-on software engineer and technology strategist with experience spanning cryptography, software development, technology architecture, IoT, and RFID. She has led international team building technology solutions. She is the co-founder of Nexatrack, an RFID and IoT solutions company. Sujita ma'am combines deep technical expertise with the strategic leadership in product development, agile delivery, and business operations. With an MSc in computing and an MBA, she brings together strong technical leadership and insight, commercial acumen, and global experience in technology and international trade. We are proud to have such eminent person amongst us today and thank her for accepting our invitation and being here with us today. It is now my privilege to invite Sujita Purushothaman ma'am to come forward and address the participants. Thank you.
Ma'am, your voice is not audible. Voice is not audible, ma'am. No, ma'am, not able to hear your voice.
Can you hear me now?
Yes, ma'am. Yes, ma'am.
Awesome. Always a little bit of tech problems. So I'll start again. I'm here to talk about entrepreneurships and startups in the Industry 5.0 era. Now, I know everybody's heard about Industry 4.0, 5.0, probably 10, 20 times in this week. I'd like to take a step back and distinguish between Industry 4.0 and Industry 5.0. So in 4.0, not everybody is at 4.0 at the moment, but in 4.0, we were talking about things like sensors, 3D printing, about IoT, about digitalization, about smart factories, nanotechnology, robotics, additive manufacturing, etc., etc. You can see the word cloud there. There is a lot of overlap between Industry 4.0 and Industry 5.0. What we need to remember is that these are just terms that are not well defined. They are just trends and a general shift or a general progress from focus in one area to focus on another area. So when we talked about Industry 4.0, for example, we talked about augmented reality. We talked about 3D printing. When we moved to Industry 5.0, we didn't throw away those technologies. We kept using them, but we just used them with a different focus or a different shift in general. So whereas in Industry 4.0, augmented reality may have been a novelty and it was the end in itself. So companies might have decided to implement augmented reality because it was very attractive in terms of getting market presence, in terms of getting a first mover advantage. In Industry 5.0, augmented reality would have been put to practical use. If we move to Industry 5.0, we see the subtle shift. The focus is away from the actual technology to the objectives of the technology. So what do we want in Industry 5.0? We want sustainable industry. We want human-centric development. We want humans focus on skill tasks while cobots help to do all the tasks that are difficult for human beings. So lifting heavy stuff, automation of repetitive tasks, etc. Are we still using the old technology? Absolutely we are. We are still using augmented reality. We're still using nanotechnology. We are still using AI. We are still using virtual reality. All the technologies that we used in 4.0, we are still using in 5.0. But this time we are using it not to reduce costs and not to build profits, but we are using it with a more human focus. We're using it basically to make humans more powerful. The best thing about human beings is that we are capable of thinking. What differentiates between what differentiates a human being and a robot? A robot cannot think. This means that a human being will be able to make progress that robots cannot. So do you want a human being to be thinking about what's possible, or do you want a human being to stand in a factory line and do a repetitive task? If you look at it from a business point of view, it is a waste of resource to make human beings do repetitive tasks, because human beings are not good at repetitive tasks. We get bored, we get tired, we start thinking about different things, and the repetitive task becomes of lower quality. We make mistakes. But if you ask a robot to do repetitive tasks, a robot can do it 24/7. It doesn't get tired. It doesn't make mistakes. It can keep going on and on. So what is the human being more suitable for? What kind of task is a human being more suitable for? And the answer to that is skill tasks. Yeah, the human being is more suited for skill tasks. I will actually share my screen again because I've just realized that the screen's not being shared. So if I go back to 4.0, so these are the keywords of 4.0. We had 3D printing, we had IoT, digitalization, etc. in 4.0. When we moved to 5.0, we had the same technology. We had blockchain, AI, virtual reality, etc. But we have a bigger focus on human beings, on sustainability, on augmenting the human capabilities. Yeah, we make the human beings focus on the skill tasks, and we make the machines do the repetitive and the difficult jobs. So the focus here is always on the human being, as opposed to 4.0, where the focus was on the technology itself, what the technology can achieve. Yeah. So we're not trying to replace human beings. We're trying to make human beings more powerful, or we're trying to use the human resource as best as possible, which is the human brain. At the end of the day, the one thing that robots can never do, or artificial intelligence can never do, is to think, yeah, which human beings do. So we look again at what's actually changing in the industry at a global level. We have economic and societal transition, yeah, where previously a business would focus on efficiency and would focus on productivity. This is no longer the case. Now we're trying to make human life better. Yeah, there is an understanding that industry needs to contribute to society. The good corporate citizen is one that contributes to society. CSR, the old buzzword of corporate social responsibility, is actually embedded in development today. We are talking about sustainable, human-centric, resilient industry. We're looking at people, planet, profit. It can be a little difficult at times to see when in new industries like AI, for example, depletes resources so much. Yeah, but this is still an issue. This is still getting attention, and it is still changing. The developments are addressing this depletion of resources, this exploitation of people. So we look at some examples of Industry 5.0. Of course, if we don't look at examples, then we won't understand, we won't be able to internalize what is the development that's happening. So in my slides, I've got QR codes in the top right-hand corner. This just takes you to links for those news articles with a lot more detail than what I can present in the slides. So you can use, if you have a smartphone, you can use your smartphone to scan the QR code and you'll get the link to the website. So one example is the BMW factory in Spartanburg and Dingolfing. The one in Spartanburg uses human-robot collaboration in the assembly. So those big robots, they do the heavy lifting. Yeah, for example, placing the heavy sheet metal parts into place, putting them into place to build the cars. What does this do? This helps to reduce worker strains, where previously human beings had to use gloves and 2 or 3 people had to lift the heavy metal sheets. Now the robots do that. So does that remove the need for human beings to do the job? Absolutely, it doesn't. What it does is it changes what human beings need to do. Instead of actually lifting the heavy sheets and putting them in place, human beings can step back, watch the operation, and learn how to, and think about ways in which this can be done better. So, for example, they could look at the workflows when a heavy metal sheet is lifted and put in place. is that the best way to do it, or is there a better way of assembling the body of a car? When human beings take a step back and they can watch how the work is being done, this allows them to think. So if we go back to what I said earlier, the best resource that we have in human beings is their brain. They can think and they can make improvements. We are always limited by our imagination. What we can do is only limited by what we can imagine. And if you look back 50 years ago, people could not have imagined what we're doing today. We have, at some point, somebody's imagined something and made that, brought that to life, which is why we have this kind of progress. So this is a classic Industry 5.0 pattern. Robots assist and human beings lead the way. Yeah. So I'll go to other examples. Another example is the BMW iFactory. This is in Germany. So in this factory, you don't have people carrying stuff or people putting stuff on a trolley and pushing. That again is manual work. That is a waste of time. So we have robots that transport materials along invisible pathways. So the robots have their predefined pathways and they talk to each other, so they don't cross each other's paths. Human beings don't need to interfere in that. They are self-coordinating, self-navigating, and self-driving. And this isn't just one type of robot. The forklifts and tug trains are also part of this transport system. So we have a transport system within a factory. So if you look at most factories today, they're not yet Industry 5.0. You will find things being moved around by human beings. This causes problems. You're wasting your human resource doing manual work. Industry 5.0 means you want human beings to do the thinking work, not the manual work. B, there's a lot more accidents. It's a lot less efficient when you use human beings to move things. So what we need to do here is to move towards entire systems that are self-coordinating, self-navigating, and self-driving. You want to remove human beings from the repetitive known tasks. Yeah. So what does that do for human beings? Now, when human beings are taken away from the repetitive task, in this case, they have 3D scans to allow better visualization of the site. I have digital twins. A digital twin is again another Industry 4.0 technology, which is now used very heavily in Industry 5.0. So when you take human beings away from pushing the trolleys or driving the cars, you get them to look at the big picture where they have a much better visualization of how the driving or the transportation works. And this helps them to get better ideas of more efficient and more productive ways of doing things. So is it better to have different routes? Is it better to use different types of transportation? These ideas come to mind when, say, somebody who is pushing the trolley, if they are busy pushing the trolley all the time, they don't have the opportunity to take a step back and look at the big picture. But when they take a step back and they look at the big picture, they say, actually, you can rearrange production this way and you will need less transport. These things come to mind when you have better visualization through the 3D scans or the digital twins. Now, in that BMW iFactory, there was also an innovation hub that allows people to learn and adopt new tech. This is really, really important, and we'll come to it in the following slides as well. The reason why the iFactory is very much talked about, is because not only does it implement solutions that free up people, it also helps people to learn and adopt the new technology. So BMW employees can go to the innovation hub, they can learn how the technology is used in other places, what's available. They can also take that technology and bring it back to their own places of work, which means that it is contributing towards human development. Yeah. So this is next one. Then we can also cite FANUC as one of the leaders in Industry 5.0 technology. So in manufacturing, automation is a big thing because manufacturing was very heavily people dependent. You needed a lot of people to take part in manufacturing in order to be able to deliver what was needed. Automation frees up human beings. Now, a lot of people do view it as redundancies and people losing their jobs. This, you cannot say that it does not happen. It does happen. People will lose their jobs. People will be made redundant. But there is an opportunity there. It is a challenge to be overcome. People need to be retrained. People need to be reskilled so that they are able to perform the jobs that will be required in the future. Remember, the move is away from using manual labor, using humans for manual labor, towards moving humans for skilled labor. So the redundancies and the replacement of human beings in the factories with robots is actually an opportunity. This is an opportunity to help people to retrain, to learn, to use their brains rather than their brawn. Yeah. So FANUC is a leader in smart factory automation. It has a variety, a huge variety of robotic arms that are designed to cater to a huge variety of users. Yeah. So you have robots that paint, that can weld, that can make food, that can pick and pack, etc. Now, from a business point of view, there is a cost-benefit ratio to be calculated. Robots are expensive, they're not cheap. Human beings can vary in cost. Yeah? Human resources can be expensive, can be cheap. Now, if we look at human resource, the cost of skilled human resource is always more expensive than the cost of unskilled human resource from an entrepreneur's point of view. So what we need to do is to look at where to make those cost savings beyond the immediate. So today, your unskilled human labor might be cheaper than the advanced robot, yeah? But will that be the case in 5 years' time? In 5 years' time, the people who have adopted the robots to automate their manufacturing might find that robots are significantly cheaper. What will happen to the factory that did not adopt robots and used human labor? They will be left out in 5 years' time. So it is very, very important to look at the cost-benefit ratio today, undoubtedly, but it is also important to look at the cost-benefit ratio 5 years down the line and 10 years down the line. As a business, if we want to sustain in the longer term, we need to look to the future. We need to look at what's happening now, and we need to make calculations and guesses, educated guesses, as to what will happen in the future. So another example of Industry 5.0 in action is the Adidas Smart Factory. So if you think about a traditional shoe factory, you have production lines with people working on the shoe along the line, different tasks in the manufacturing of a shoe, say cutting the leather, or cutting the fabric, forming it into shape, gluing, stitching, etc. So one shoe can be handled by 10 or 20 people in a line until you get the final shoe ready for sale. However, in the Adidas Smart Factory, what they did was they completely automated shoe production. They used 3D printing and they used additive manufacturing technology. So you didn't need to do any stitching, gluing. You didn't need a human to touch the piece of shoe along the production line. What did that do for the company? Just 160 people were required to make 500,000 shoes. So it could scale up very, very much. You could make so many shoes because of the automation. Now, what was the added benefit of this? Is the market going to take 1 million or 1 billion number of identical shoes. Not really. People have desires, people have different ideals. So I might want a blue shoe, somebody else might want a black shoe, somebody else might want a shoe with a different pattern. So does that automated shoe production at scale deliver what the market needs? Actually, it does. What they did was implement mass customization at a very low cost. So they could program the 3D printing machines to print different types of shoes in the same production line. So you could change the cutting pattern. If you have 500,000 shoes, you could have 500,000 different patterns, and you could print them and produce the shoe in the same production line. Whereas if it was a human production line, you'd have to educate every human being in the line to change what was needed, and there would be huge costs to make 500,000 different patterns. So this is where I said you need to think about what's going to happen in 5 to 10 years down the line. If you stick to a very human-heavy production model, what are the benefits and what are the developments that you're going to miss out on in 5 to 10 years? There is an element of imagination that needs to go into your planning. You need to anticipate what can happen in order to stay relevant in the market today. So these kind of developments are not restricted to developed countries. One of the nice developments that I've seen recently is Reliance Retail in India. They have a new store that uses RFID technology to provide customers with smart virtual assistants. So somebody takes one piece of clothing, goes into the changing room. They don't even need to try it on. They don't even need to try the shoe on. They can just hold it up, and the technology will, there's a mirror that dresses them in the dress that they've taken. Each piece of clothing is tagged with an RFID tag, and it scans your body and dresses you in that clothing that you've chosen. It also provides you with alternative options. So the smart virtual assistant, the RFID tag identifies the individual piece of clothing, identifies similar clothing that might be of interest based on previous customer usage. So it can also suggest, oh, you need to go one size up, or why don't you try this one, which is slightly different cut, slightly different color. So again, if you look at it, the technology is used to focus on the human being. Yeah. So the human being is the customer, and the objective of the technology is to make the customer happy, to make the customer experience seamless. There's no friction. They don't need to go to the changing room, try one, go back out, put it there, look in the rails for something that is slightly different, different size, etc. The technology already does all of these repetitive tasks. So the key here is repetitive tasks. Every customer has to go through the same thing. Every one of us, when we go to a shop, we buy a piece of clothing. Let's say we buy a jacket. Everyone who buys a jacket will go and look in the rail for something they like. They will go and most probably go and try it on. If they don't like it, they need to go back to the rail. That's where the repetitiveness starts. They need to go back to the rail, put it back, look for something else that suits, look for a different size that suits. And that is the repetitive task that the technology eliminates. Yeah. And there's also, of course, self-checkout kiosks, etc., which again goes back to our old drive efficiency, save costs for the retailer. So we've talked about a little bit about what was possible. We need to look at what are the challenges. From a business point of view, challenges are not problems. Challenges are opportunities. When we overcome a challenge, we become competitive. We become better than the other businesses. This means that we need to look at challenges positively. So if we look at one of the challenges, for example, investment. there needs to be investment in new technology. Industry 5.0 technologies are not cheap. You need not only money, but also time. You have to put these two to work to adopt the new technologies. Now, the problem here is for SMEs, small and medium enterprises. They don't have a lot of cash reserves, and investment in new technology is always constrained by how much money they have to invest. It is a competing challenge. You have to pay salaries, you have to feed your employees, but you also have to invest in new technology to keep the business relevant 5 or 10 years down the line. It is a competing demand, and this is the biggest challenge entrepreneurs need to overcome. Yeah. It is a particular problem for small companies because big companies tend to be cash rich. They have better economies of scale and they are cash rich. However, the downside is they are slow to change, they are slow to adopt change, and they have lots of legacy systems, which we'll come to. SMEs can be quick, agile, they can adopt new technology quicker. So there are pros and cons for both large and small companies. Yeah. In small companies, the key personnel are often chasing the next payment to make next month's salaries. That is absolutely the case all over the world. It's not generic to, it's not specialized to one particular country or industry. In every country, small businesses are looking for the next revenue generating customer that will pay the next month's salaries for their employees to keep the business running. Yeah. So how can they move towards a better solution, a better environment? The solution is always to keep the dream in mind. It is not a big bang approach, it's an incremental approach. Yeah, and I'll come to this later on. You need to always focus on where you're going. Even though you don't reach your destination today, you take small steps towards your destination today. Yeah. So if we look at other challenges, and this is more relevant for larger companies, there is a lack of enterprise-wide strategy. Now, Industry 5.0 by nature needs an enterprise-wide intentional strategy. It doesn't happen by chance. It doesn't happen by accident. It needs people in leadership positions to take decisions that move the whole organization down a particular path. So if we look back at the BMW iFactory or the BMW transportation system, the smart transport systems, that didn't happen by chance. Somebody sat down, or some people sat down and thought, right, we can remove all these human beings pushing the carts and driving the forklift, and we can make it an autonomous transport system. So that was an intentional strategy. And that is required in order for organizations to move to Industry 5.0. It is easier for SMEs to develop an enterprise-wide strategy than for large companies to develop an enterprise-wide strategy. Now, if you look at the Indian context, you look at large organizations in India, I don't know, for example, maybe Hindustan Aeronautics or any other large manufacturing organization. Think how difficult it is to implement an enterprise-wide strategy. You might have thousands, tens of thousands of employees that are working. How are you going to, A, inform all of these people what is the enterprise-wide strategy, and B, how are you going to buy their cooperation? There's always resistance to change. How are you going to buy their cooperation, bring them all on board so that everybody works towards achieving the same goal? Yeah. You need visionary leaders. You need visionary leaders who will bring people with them. Okay. Because the other point is, Industry 5.0, the move from 4.0 to 5.0 is not risk-free. There is always a risk with change. You cannot ignore that. So when you face risk, there will always be people who are risk-averse and who don't want to take the risk. So they will struggle to adapt to change, they will struggle to follow the lead of disruptors. They may look at disruptors as, time wasters. You're causing trouble. You are changing the way things has done. It has worked for 30 years. Why change now? These are all the questions that you will face. The way to handle risk, of course, is to actually sit down and think, to do it intentionally, to try and evaluate the options and to make an educated decision. But you also need to bring people on board, and that is non-negotiable. So one way that you buy in employee engagement or you bring people on board is that you need to cross the skills gap and you need to transition the workforce. Yeah. So if you remove all the people who were pushing the carts and who were carrying the heavy stuff and putting it in place, what are you going to do with the workers? You need to give them new skills. Yeah, so Industry 5.0 needs workers who can combine technical literacy. You need AI, you need robotics, you need analytics, you need creativity and problem solving. More than the actual technology skills, you need creativity and problem solving. So you need people who can imagine new solutions, who have a problem-solving mentality, who want to make things easier. They then use technology for solving the problem. So I think when we are quite traditional in our mindset, we tend to favor rigor in technology over creativity. And that tends to lead to very good implementation when the idea has been well developed, but it does not lead to new ideas. Now, if we want to be leaders, we need to have new ideas. We need to have new ideas that we can implement. The winning combination will be when we have new ideas as well as the technical rigor to implement those new ideas. When we have those two together, then we will not be beaten. Yeah, we will be the top of the world. So the world today does have major skill shortages in robotics, in AI engineering, digital technologies, etc. But training is very expensive. I'm sure your college or institution will know better than me what is the cost of training people. How much does it cost for you to take a young student into your college, train them over 3 or 4 years to get a degree program or to get a postgraduate degree and come out? It is expensive, it's not cheap. And the cost is not just in the time of the student and the resources, the physical resources, but also the cost of training the trainers. You all are here to upskill your own skills, and there's a cost to that. The cost to that is your time, your money in getting the skills in to upgrade your own skills. So, and it is a continuous process. It's not a one-off. Because technology moves so fast, you are on a hamster wheel, if you like, to keep yourself up to date all the time. So it's a continuous cost. That's also another issue to be considered. Now, there will also be resistance from some parts of the workforce. Yeah, they have already been in the industry for 20 years. They have a very strong expertise. They know how things are done, and they're resistant to change. And that is normal. The way to approach it is that we don't fight it, but we bring them on board by giving them new skills and by transitioning slowly. The challenge here is for educational establishments such as yourself. Yeah, most definitely, it is up to educational establishments to upskill your trainers and to make the cost easy. So ideas, creativity, problem solving is not just in applying the technology in industry, but also applying the technology within skills and education. How can you make teaching more efficient? How can you make teaching lower cost? And how can you engage with the students? How can you facilitate learning? How can you help the students to learn better so that they are more equipped, but they don't pay as much? That's a challenge even in the education sector. So what is the other biggest challenge that we all face, regardless of where we are, is that the competition is global. Yeah, organizations will be competing for talent with international tech companies. How many people from India are working internationally? How many people, skilled workforce, are leaving the country to work for Microsoft, to work for Amazon, to work for Google? It is a source of pride, but it is also something to think about, that India will be losing this talent. You need the talent in the country to be thinking, to be developing new solutions, to become competitive. So if you are a startup in India, you will have to pay global salaries to attract the best talent. You are not competing with other companies in India, but you are competing with the Microsofts and the Googles of the world. So you're going to have to pay global salaries. You're going to have to find other ways to keep talent so that you can make that competitive advantage that you need to. Now, that's one side of the coin, the input, the inputs you need to make a competitive solution. But the other side of the coin is you also have to provide your solutions at globally competitive prices. You have to compete with DeepSeek from China. You have to compete with the cheapest manufacturing in China. So the commercial dilemma here for businesses is that you have high input costs and you have to sell at low prices. So that's the challenge to startups. That's the challenge even to large companies. You have to find ways in which you can use technology to get the best inputs to stay at the cutting edge of competition, both in terms of the products you provide as well as the cost of the product that you provide, products and services. So when we say the competition is global, the other thing that we need to keep in mind is that national boundaries will become more and more irrelevant in the competition to develop solutions. Yeah. So if you look at ChatGPT and DeepSeek, ChatGPT is American, DeepSeek is Chinese. Both are available internationally. As a person sitting in front of my computer, I can use I can and do use ChatGPT and DeepSeek. It doesn't matter where I am. I can be in the UK, I can be in Africa, I can be in Latin America. I still can use an American product and a Chinese product. Indian startups will have to compete at the same level. If you come up with a competitor to ChatGPT and DeepSeek, your solution will be available throughout the world. So you are competing not with companies that are in India, but you're competing with companies that are around the world. Yeah. So you have to think global. You cannot think local. You have to think global. You have to compete globally, and you have to provide solutions that work at a global level. Now, we provide solutions at a global level, but our governments are not global. Yeah, we have some global entities that try to govern, but governments are still local. Yeah, so regulation varies globally. Different countries have different laws. Yeah, some countries have a minimum wage, some countries don't have minimum wage. Some countries have strict labor laws limiting automation, others don't have. So if you're unlucky enough to be in a country where redundancies are difficult, I say unlucky because it's a opportunity. Yeah. So you have costs associated with redundancies before you can go and buy those very high-end robots to automate. You need to look at how you can work with local governments. That's a disadvantage as well as an advantage. Some regions require carbon disclosures and green investments, others don't. So if you're not regulated in terms of emissions, you can pollute the environment. You can do as you like, and find the latest tech without any consideration for the environment. So you might be first in the race because your costs are less. Yeah. Whereas firms in heavily regulated regions might have higher compliance costs and therefore they need bigger investments. So uneven regulatory pressure distorts global competition. There's two sides of the coin. There's also different levels of government support. So if you look at European countries, there is a lot of support for startups. There's different types of funding. There's different types of competition. There's government funding in terms of grants and government support in terms of making technology available to startups. What this does is this gives startups a boost. So if they've got, instead of looking for $1 million funding, if they've got a grant from a government for $1 million, then they are suddenly very powerful. They can focus on developing the solution rather than finding the funding. Whereas in some countries, there's not as much government support. So that means that the startup with an idea needs to find funding first before they can go and develop the solution. So all this impacts competition. So you need to look at how you can compete effectively at a global level. Sometimes this can take the form of what we call jurisdiction shopping. Some companies might choose to start in a different country because the advantages for startups are very many. It gives them a boost. But when they grow, they then move to different jurisdictions. Yeah. A key example for that is the Adidas Smart Factory that I mentioned earlier. So the Adidas Smart Factory started in Europe, I believe in Germany, because there was a lot of support for companies that wanted to adopt new technologies, companies that wanted to develop new solutions. But later on, it moved to Asia. Why? Commercial reasons, jurisdiction shopping. As it grew, the tax burden became higher. So different countries provided better tax structures, so they moved. So again, we go back to the competition is global. And the competition is global, not just for startups, but throughout the life cycle of a company. As you grow, the competition is still global. That does not change. So we look at another challenge, weak national infrastructure. Now, advanced economies, you will find very good mobile or cellular signal, for example. You have 5G everywhere. What this does is it provides a good environment for new technology to be adopted. And you need, as a startup, you need that initial adoption to grow your business. Yeah. So advanced economies have high technology all around. There are many factories that use robotics. There are many factories that use digital twins. There's a lot of green technology, etc. What benefit does this give? Now, those of you who've looked into business might have looked at Porter's theories. So if you have a cluster of high-tech companies, you can learn from each other. Yeah, you can learn, company X did this and they faced all these problems. If I'm developing something similar, I'll face the similar problems. So I avoid repeating the same problem and I make an improvement. This is possible only when there's a cluster of high-tech companies in the region. And this is true across the world. In US, you have clusters of high-tech companies in Silicon Valley. In India, you will have clusters of high-tech companies in Bangalore and Mumbai. So you learn from each other. But there are regions in the world that lack this infrastructure. There are regions that don't have even cellular signal. There are regions that don't have high-tech companies. It is a very unequal world. Yeah. So businesses will find it difficult to compete with firms in these technology-rich countries. So this gap will grow over time, and the early adopters will find that they have structural advantages. So the countries that are developed will become more and more developed. The countries that are underdeveloped, if they don't do anything to improve their national infrastructure, they will continue to lag behind. The gap will grow bigger and bigger. Yeah. So when the supply chains globally progress, the firms in the undeveloped countries continue to be locked out of the global supply chain. Yeah, so they can't meet the digital integration standards. So, for example, a student in your college who has access to internet will be able to access ChatGPT and DeepSeek, and they have information at their fingertips. They can help with instant answers. They have the internet at their fingertips. They can find instant references, instant authoritative sources. Whereas, say, for example, a student in remote Africa with no access to internet will lag behind. Their growth and their learning will be constrained. So weak national infrastructure is absolutely a problem for startups. Again, you can jurisdiction shop, but you can also do geographical location shopping. So if the infrastructure in a remote place in India is a problem, you can move to the city. You don't have to move outside the country. You can move to a better place in the same country, which has better national infrastructure. The other challenge here is that advancement rely on access to global supply chain. Yeah, so there are political developments in the world today where we can see trade wars, we can see tariffs, we can see all sorts of issues going around which are disrupting supply chain. Yeah, so companies do not develop in isolation. They develop based on existing technology. As the saying goes, we stand on the shoulders of giants. We develop something new based on something old. We develop something new based on something that currently exists, and we need access to global supply chain. So if we are developing sensors, for example, we are developing based on natural resources, such as rare earth minerals. If we are developing robotics, we need parts from around the world. We need sensors from around the world. And these high-tech components that we are using to build our solution is not unique to any one country. These are global supply chains. Yeah, they are dominated by a few countries, by the top economies of the world, such as the US, China, India as well, and BRICS, Brazil, Russia, India, China. Few countries dominate the supply chain. So these supply chains, however, are easily disrupted. Yeah, there can be war, there can be export controls, etc. So the startup needs to be aware. All startups need to be aware of what they rely on, and they need to make contingency plans. Tomorrow, if I don't have access to this sensor, how will I continue to develop my product? Tomorrow, if I don't have access to this AI library, how am I going to continue developing my product? Tomorrow, if I don't have access to anything else that I'm using today, how am I going to continue developing my product? So we need to look at contingency plans. As a startup, it is both easy and difficult. It's easy because you're new, you can develop contingency. It's difficult because it can be expensive and you might be locked out. Some global supply chains are not accessible to startups, and you don't have the buying power of large companies. So these are problems that we need to think about, because they can also provide opportunities. Yeah, remember, as a startup, as a company, challenge is an opportunity. So if you cannot access an AI library, can you develop one? Can that then be sold to the market as another product? Yeah, so challenges are opportunities. The other side of that is that global espionage, global intellectual property theft. Yeah, sorry, I have a question, Rubeya. You have a question? You raised your hand? No? Okay, I'll continue. Intellectual property theft and digital espionage. Yeah, intellectual property is relevant at a global level. So source code written by programmers in Coimbatore, for example, will be useful for developers or companies in New York, London, and Shanghai. So what is intellectual property? Any knowledge that's useful, design, data, algorithms, everything's useful. So in Coimbatore, if you find a new place, a new method of doing something, people around the world will find that useful. Yeah. Now, because it is useful around the world, the threat also comes from around the world. Yeah. So if you have a new algorithm that you have written and you've stored in your PC in Coimbatore, you might find that you are getting cyber attacks from China, Russia, and US. So your threats are global. Your supply chain is global, your competition is global, your threat is also global. Yeah. But the unique problem with intellectual property theft and digital espionage is that the threat is also from the inside. Yeah. You could also have one or more of your employees who might be willing to sell your algorithm or your design or your data to somebody outside. We see data theft all the time. We see ransomware. People hack into your systems, they encrypt your data, and then they leave you without your data, access to your data, until you pay a certain amount of money you're held for ransom. You see data leaks where data is so important these days that data on its own is valuable. So if the data is leaked, another company gets access to the data, they can train their AI systems on your data and serve your customers. So that puts you at a disadvantage. So you have to look at the possibility of attacks from both outside as well as inside. It doesn't work just from outside, it also works from inside. Yeah. So what are the other challenges we face? So you have legacy infrastructure systems. So there are very many factories that run on outdated systems. So you still use proprietary machinery. You have fragmented workflows. So some departments in the same company might be using a different system. They might be doing things differently. Some other departments might be more forward-looking. They might adopt new technologies. But then there will come a time when the two departments need to work together, need to share data, need to work on the same system. And then it becomes a problem because you've got fragmented workflows. Yeah. Then you need to integrate the old systems with the new. So there will be a cost and downtime associated with bringing the old systems up to date so that they can work with the new systems. The other problem also is that legacy systems come with legacy cybersecurity vulnerabilities. So the old systems did not anticipate the developments of today, so they are going to be more vulnerable. So these are problems that slightly larger, medium to large companies will have to look at, but SMEs need to be aware when they're working with legacy systems that they will come across these problems. Now, this to me is one of the biggest challenges of Industry 5.0 in general. Yeah, there is always marginalization. Historically, there has always been marginalization. This is not removed with Industry 5.0. Marginalization is when some members of society are left out. So if you look at AI data is trained on the Western average, which is the white male. Yeah. How do we see problems arise because of this biased training data? Facial recognition systems are less accurate. For example, they're more accurate on white male faces, but they're less accurate on Chinese and Indian faces. So if an Indian company or an Indian government wants to adopt facial recognition system that's built in America, they will have lesser accuracy compared to the American government, for example, or the European government. Why? Because their data set is a Western male data set, whereas the working data set for the Indian government would be a completely different face. Yeah. So if you went to ChatGPT, for example, and say, draw me a picture of a surgeon, 98% of the time, it will draw you a picture of a white male. But 98% of surgeons are not white male. So why does that happen? Because the AI system has been trained in that data set. So the data set that the AI system was fed that had 98% white male, so it produces 98% picture of white male as a surgeon 90% of the time. Again, when you ask it to show patients, or you ask it to show recipients of charities, it will always show Black people as recipients. But that's not always the case. Poverty exists around the world. Even in the most developed countries, there's poverty, and there are recipients who are white, who are different ethnicities. So the thing to look at is AI algorithms in particular. They amplify the bias in data. Whatever data we feed, that's what it will give us back. Yeah, this is with AI technology in particular. So gender, wealth, race inequalities, these are the problems in the data that we are feeding, and we amplify these problems. So if ChatGPT always produces an image of a white male as a surgeon, what is the problem with that? The problem with that is that youngsters, children who go to ChatGPT, who say, show me a picture of a surgeon, and get a picture of a white male, they will always think that a surgeon is a white male. So when they see a brown woman or a Black man as a surgeon, they will have mistrust. Yeah, and because that has been ingrained by the systems and the infrastructure in them. So what we need to do is to be aware of these kind of biases, and we need to work to change this so that no member of society is left out. If we look at the whole ethos of Industry 5.0, it's human-centric. Yeah, so human-centric means all humans, not just one type of human. So I've talked a lot about the challenges. Stop for any questions before I move on to benefits. Do we have any questions from the audience? No? Okay, I'll move on. So what can we do? What are the benefits that we get out of adopting Industry 5.0? So we have competitive advantage. Yeah, the technologies that we use, we develop a more human solution. I'll come to your question. We develop more human-centric solutions, so we have more efficient resource management. We have faster production. We also have reduced costs and increased profits. Just because we have moved from 4.0 to 5.0 and we don't focus on reducing costs and increased profits, doesn't mean that we don't enjoy those benefits. Yeah, we still enjoy those benefits. We still need those benefits. Yeah, so for example, automation can free up manpower for more productive tasks. I said this quite a few times. You don't use human beings for repetitive manual tasks. You use human beings for creative problem solving. Yeah. I have a question. What skills should next generation entrepreneurs develop to succeed in a human technology collaborative environment? In my thinking, the problem, if we go back to all throughout what I've said, is you need creative thinking and problem solving. That is the biggest skill that you need. You need to think from the mindset of, how can I solve this problem? Technology is not a goal in its end. Learning the newest language might be nice today, but in itself it's useless. We need to use technology to solve problems. We need technology, but we need big picture thinking. Yeah. Am I going to use C#? Am I going to use C? Am I going to use Java? It's rather irrelevant when you look at Copilot can do it all. But what problem am I solving, and which language is best for solving this problem is what I need to know. Yeah. So it doesn't mean that rigor has lost its place. Rigor is absolutely important. And I mentioned earlier, you get a winning combination when you have people who are very, very technically skilled, but who also have a creative problem-solving mentality. So it's a shift in the mindset from learning to pass exams to learning to solve problems. So my personal opinion is that we need to teach students to solve problems, and creativity doesn't come with a structured method of training. We need to throw problems at them and allow them to think and come up with problems that come up with solutions that solve these problems. Yeah, there are many methods which we can use to help students to think creatively and to solve problems. But I absolutely emphasize that we should not lose the technical rigor when it comes to focusing on creative and problem solving. We absolutely need the technical rigor. A key example is that lots of people use ChatGPT today. They use ChatGPT to write essays, even ChatGPT to write news articles, lots of things. What is the problem with that? The problem with that is we have useless content. We have content that is produced by AI tools, content that is consumed by AI tools that marginalizes human beings. Yeah, absolutely use Copilot for helping in programming, but don't use Copilot if you don't understand the code that it produces. Sorry. So use Copilot, make you a better programmer, but don't use Copilot without understanding the source code that Copilot produces. So remember, the whole ethos of Industry 5.0 is human-centric, empower human beings. So use the tools, but you need to be aware and you need to control the tools that you use. You need to have knowledge of how the tools work in order to be able to deliver the solutions and not be marginalized. I will go back to benefits. I hope that's answered your question. Any more questions, please put them in the chat and I'm happy to answer them as we go along. So I talked about the benefits, which is competitive advantage and reduced cost and increased profit. There's also increased flexibility. Yeah. So you can have very flexible operations. A key example of that is we're seeing work from home. How many people can work from home these days? The reason for that is all the software tools that are necessary are available online. I'm sitting thousands of kilometers away from you guys, and I can talk to you. You can hear me. We can communicate. There is no problem. There's no little to no cost for communication. So we are very, very flexible. Sensors can facilitate remote monitoring. Do I need to be in the factory 24/7 to monitor the temperature of a particular item that's being stored? No, I don't. I have sensors that can do that. Cloud technology can release personnel from being tied to the desk. We know about work from home very, very well. Innovation, effective automation and resource management allows for greater focus on research and development. So if we go back to the running theme of Industry 5.0, take human beings out of repetitive manual tasks, allow them to think, empower them. Yeah. So we have in the past always said, automate things for greater efficiency. But in Industry 5.0, we are automating things to free up human beings to think, to be more creative. So we need innovation. We need new products. We need new services. We need solutions that enhance human lives rather than eliminate humans. So I come to how to. I've got another question. How can startups use AI and human collaboration to gain competitive advantage? That's part of the how to. Yeah. We do small incremental steps, not big bang approach. Now, if you remember what I said earlier, change is always fraught with risk. There is no change that does not come with risk. How do you handle risk? You take small incremental steps. Yeah. So you adopt technology in small incremental steps. So you remove the need for large investment and you reduce risk. So if you look at the example of the BMW iFactory earlier, I said somebody needed to take a step back, look at the big picture and design a transport system for the whole factory. But did that need to be a big bang approach? You could start off with designing a transport system for one section of the factory, And then when that worked, you refine the solution, you remove all the problems, eliminate all the problems. You can then increment it for 2 departments, 3 departments, 1 whole floor, and then scale up to the whole factory. Yeah. So it allows for learning. People can learn as you go along. As the project progresses, you can learn how technology can be useful for their operations. Now, you have to work with technology partners. Now, to answer your question, how can startups use AI and human collaboration? You have to work with partners. You cannot work in isolation. We're talking global. We're talking global supply chain. We're talking global customers. How can you develop a solution in isolation? You cannot. You have to work with technology partners because they are specialized in what they are doing best. You have to find your specialization and get a better overall solution. It's difficult. Working with human beings is the biggest challenge a startup will face. It's not the technology. The technology is, a program will always do what you tell it to do. Yeah, if there's a problem in the program, we use this term, we say PIC, yeah, problem in the chair. So the problem is with the person sitting in the chair, not with the program. Because you've told the program to do, it's a dumb program. It will always do what you tell it to do. The difficulty is working with human beings. Human beings are diverse. We have different likes, dislikes, thoughts. We have different principles, different ethics. How do we bring people together? That's the challenge. Yeah, there's no easy solution. You have to try, and you have to find the people that work well with you. You have to find other companies that are complementary. Yeah. So if there's some other company that's complementary, you find these companies that will help your business, and you form a partnership and a collaboration. Yeah. So you have to use off-the-shelf software where possible and adapt or customize where necessary, because technology moves so fast. If you think of doing everything in-house, you're going to be left behind. Yeah. So you have to think global. This is a thing that has been running throughout the presentation as well. You have to think global. You have to keep up to date with progress that is happening at a global level. You cannot sit in one country, in one state, and look at what's happening around you. You have to look at what's happening outside. So, for example, you can look at European Union Industry 5.0 Community of Practice. They have industry leaders in Industry 5.0 talking about what they're doing and things like that. Just follow them. You need to know what's happening in the advanced centers of the world. Yeah. And to go back to your question, startups, the topic of this theme, startups, the aim of startups is to develop a solution that is delivered to the market. You have to listen to the market. The market guides us to what is in demand. The market guides us to what will sell. Yeah. So we need to take feedback, and we need to improve continuously. And the market is the world. We have to listen to customers worldwide. So from my personal experience, we started this business about 3 years ago. The solution we developed, or we had in mind 3 years ago, is quite different to the solution that we have today. The basics are still there. The idea was sound, but the implementation took us in various directions. So, for example, we thought that we would have an inventory management solution, but the demand was in asset tracking, not in inventory management. So our product features that we developed along the product, that we had a product roadmap when we started, that product roadmap has changed, and it's changed based on customer feedback. So customers come and tell us, actually, we want RFID, IoT, and GPS in one solution. So where we never thought we have to combine all of these into one solution, today we have one solution that offers all of these. Because the customer doesn't care whether you use GPS, whether you use RFID, or whether you use BLE, or whether you use LoRaWAN. The customer just wants to know, where's my asset? So the solution needs to provide an answer to that solution. You have a very, very good relevant question, Shri Bhubaneshwari. You say, how can startups build trust with customers when using advanced automation? Now, this is a challenge that we as a company face every day. How can we build trust with customers? It's not easy. Customers have to spend money. They have to take risks to buy your solution. And your solution is cutting edge. Cutting edge, the other side of cutting edge means untried, untested, and risky. Yeah, there is no getting away from it. The solutions that startups in Industry 5.0 will put to the market is risky, is untried, and is untested. Yeah, so you have to work collaboratively with customers. You have to think commercially because you need to make money, but you also need to work with customers as partners. You need to be prepared to change. You need to be prepared to accept that your product doesn't fulfill everything the customer demanded. Communication is really, really important. You have to bring aboard customers that are invested in your solution. You have to choose customers wisely. Not every customer is a useful customer. Some customers will kill your business. They will literally kill your business. So you have to choose customers that are sane and sensible, that understand the limitations of the technology, that understand that you are trying to provide them with the best solution, and that you are actually capable and best placed to provide them with the best solution. Yeah, you need communication. You need to talk to them. You need their buy-in, and you need to understand that both your solution and the customer will evolve as it goes along. Yeah, so we put a solution in the market 3 years ago. That solution has changed quite a lot based on new customers that have come on. We have listened to customers and we have changed. I admit 100%, not always. We have not always listened to customers. Sometimes when we didn't listen to customers, we have lost customers, we have lost opportunities. But we learn from that. We learn from that, and the next time another customer comes back, we listen and we say, can we do this? Is there a way we can do this? Does this make sense for us? Does this make commercial sense for us? There are customers that we have absolutely said, sorry, we can't work with you. Bye. Because they're not sensible. They need to understand that we can't do things for free. We can't educate them for free. They need to trust us. Yeah. So the answer to that is building trust. Number one, choose the best customers. You can't answer all customers. You can't satisfy all customers. Yeah. And number two is keep communication lines clear. You build trust with honesty. So if your solution doesn't solve it today, tell them it doesn't solve it today, but it will take us a week to solve it, and we can try it out, and then we can build a solution. That is the way we build trust. Yeah. That's all I have for you today. I hope I've not bored you too much. Any more questions, and I can address it. No? If not, thank you very much. I hope it was useful for you. I hope I haven't put everybody to sleep. Do we have any closing remarks from the coordinators? If not, thank you very much for your time. And I'm happy to answer any questions even going forward. Thank you.
Hello.
Good evening. As we con- as we conclude the 12th, as we conclude the 12th session of Atal Online Faculty Development. நீங்க மியூட் பண்ணுங்க, உங்க இதுல சவுண்ட் குறையுங்க. As we conclude the 12th session of our Atal Online Faculty Development Program, it is my privilege to deliver the vote of thanks for the insightful session on entrepreneurship and startups in the Industry 5.0 era. On behalf of the organizing committee, faculty, and participants, I extend our heartfelt gratitude to Ms. Sujitha Purushothaman, Operations Director, Nexatrack Limited at UK, for sharing her inspiring experiences and expert insights. Your presentation shed light on the immense opportunities and evolving challenges for entrepreneurs and startups in the human-centric, innovative environment of Industry 5.0. Your stories and strategies encourage us to embrace technological advances while nurturing creativity, empathy, and resilience qualities that define true entrepreneurial success today. To encapsulate the spirit of your session, I would like to share a quote by Steve Jobs, an icon of innovation. Innovation distinguishes between a leader and a follower. Innovation distinguishes between a leader and follower. Thank you also to our program coordinators, technical team, and vibrant participants for your active engagement and contribution that made this session a success. Once again, thank you, Ms. Sujitha Purushothaman, for your valuable time and inspiration. Let us apply these lessons as we build the next generation of startups driven by Industry 5.0. Thank you all. Update. Dear participants, the past 5 days attendance have been updated in the Atal portal. Kindly check it. And if you have any discrepancies, please inform us. I repeat again, dear participants, the attendance has been updated for the past 5 days. Attendance has been updated in the Atal portal. Kindly check it. If you have any discrepancies, please inform us. Thank you.
Sir, I have one query. What time the exam will be held? Hello. It will be shared in the.
Dear participants, the test will be conducted between 6:30 and 7:30 at the Atal portal. I repeat, the test will be conducted between 6:30 and 7:30 in the Atal portal. Thank you. The next session will commence at 5 p.m.
Good evening, sir. So can we start the session? Good evening, sir.
Yeah, hi, good evening. So, yeah, I'm ready. Can you hear me?
Yes, sir. Yes, sir.
Okay, wonderful. Yeah, I'm ready from my end. If you are ready, I can start.
Yes, sir. We can start the session.
Okay, all right. I'll just quickly check if I can share my screen.
Good evening.
No, 1 minute. Sir.
Good evening, dignitaries and participants. Next, we move on to the third session on the topic Redesigning Management Curriculum for Industry 5.0 by Dr. Prabirendra Chatterjee. I'm honored to welcome Dr. Prabirendra Chatterjee, Program Director for the MSc in Business Management and a lecturer in Marketing and Strategy at Cardiff University, UK. It is a great pleasure for me to introduce him. He has laid the foundation for his impressive career by completing his Bachelor of Science from University of Calcutta. He obtained his Master of Science degree in Business Administration and Management from University of Washington. Sir has done his PhD in Marketing from University of Washington. His research expertise lies in technological marketing with a particular focus on the applications of artificial intelligence in product design and advertising. Dr. Chatterjee began his career as graduate research and teaching assistant in Department of Economics, University of Washington. He served as adjunct lecturer and assistant professor for 14 years in several prestigious universities, including Seattle University and Cardiff University, UK. We are proud to have such a distinguished person among us today and thank him for accepting our invitation and being here with us today. It is now my privilege to invite our Chief Guest, Prabirendra Chatterjee, to come forward and address the participants. Welcome,
Thank
you,
you
sir.
very much. Thank you very much. It's my great pleasure to be here, albeit virtually. Let me quickly check if I can share my screen. Can you see the screen?
Yes, sir.
Okay, wonderful. So once again, thanks for inviting me. So my name is Prabir. I am from Calcutta and I did my postgraduate at Jawaharlal Nehru University in New Delhi first, and then at the University of Washington. So my original background is in economics, and then later I moved to business school. And currently I'm a faculty member of marketing and strategy at Cardiff University Business School. And I'm also the program director of MSc in Business Management, which happens to be the largest MBA program in our business school. We have a few MBA programs actually. One is for rookie students with few years of work ex, another for students with many years of work ex, executive MBA, as you know. Now, why I mentioned that bit, it's because, of course, today I'll be discussing things from a research perspective. I'll be discussing things as a teacher, what I, the dissemination of knowledge, what I teach my students, but also from the perspective of an administrator, in the sense, being a program director, I have to, continuously update curriculum. I have to discuss with my teaching team, colleagues, pro-dean, dean. So as most of you know, if not all, I mean, this is a huge responsibility. And since we're living in a very complex world, things are changing so fast. We need to be resilient. We need to adapt very efficiently. So things that I'll share today, I honestly believe those things, and we at the Cardiff Business School, we are trying to implement many of these things, many of the recommendations that I'll share with you today. Okay. Feel free to ask me, interrupt me at any point of time. And then, of course, if you prefer to have questions at the very end of the presentation, that's absolutely okay. And of course, we are colleagues. So if you have any suggestions, advice, suggestions, any clarification, I'm all ears. Okay. So let me start the presentation then. So just one more time, is everything okay from your end? You can see everything clearly?
Yes, sir. It is visible.
Okay, fantastic. So, I mean, I know this workshop is going on for a week now, and perhaps many of the prior speakers have already talked about like what was Industry 1.0, Industry 2.0. So it might be a bit of repetition, but in any way, I'll just give you a quick introduction that what exactly is Industry 5.0, Industry 4.0. Now, the way I see it, these are essentially just telling us different stages of industrial revolution. So there is the first industrial revolution that we know, which started in Britain. Then the second industrial revolution, early 1900s in the US, and so on. So Industry 5.0 in a way means that we are now experiencing the fifth industrial revolutions. So what are those 5 industrial revolutions? So as you know, the very first one, which started in 1800s, but of course it had the history rooted in Renaissance and all those scientific and industrial breakthroughs that typically happened in Britain, right? So think about steam engine, the early days of mechanical processes, right? So that was really the Industry 1.0. And then early 1900s, now we'll move to the city of Detroit when Henry Ford, the phenomenal American business person who completely changed the business domain, he started doing the assembly line. And for many decades, assembly line, the early years of automation played crucial role in global business, global management context, right? We know after Second World War, because of resource crunch, the Japanese, they had to invent the lean production, lean operation management system. And that too, in a way, was connected with this Industry 2.0, okay? The assembly line and the initial automation that we are referring to. Now, Industry 3.2, that, so essentially that means you're now talking about the early computers and the digital era. But of course, as you know, any industrial revolution, any industrial breakthrough, behind that, there's huge amount of, research and development, huge amount of investment in intellectual resources. So in a way, the pathway for Industry 3.0 took place during Second World War, right after Second World War, where scientists across both sides of Atlantic and in other countries too, they're working relentlessly in order to make the dream of computer come true. And in case you were wondering what is this particular the image at the very right, so there's a very interesting trivia with that. So what you see here, this is a clip, a screenshot from a commercial, an advertisement, which was introduced by Apple back in 1984. And the tagline was, 1984 won't be like another 1984. And so there are 2 1984s in that tagline. And the first 1984 is, of course, the year 1984 they're referring to. But the second 1984 was a direct reference to a phenomenal novel, a phenomenal literary creation, as many of us are aware and perhaps read that. It's the novel named 1984, which is written by British author George Orwell. And if you have read that book, you know that Orwell was referring to kind of like it is like a dystopian political fiction. And Orwell imagined there is a government or some, other institutions which are acting like Big Brother, but, it's not really benevolent Big Brother. They're watching the humankind at every point of time. And then, of course, the implication is that relentless surveillance is putting us in the shackles of mediocrity. And what Apple did here, Apple took a dig at none other than Microsoft, because they said, yes, Microsoft was perhaps the first mover. They came up with Windows, but Windows is putting you again in that shackles of mediocrity, and Apple will make you free. Okay. Free in terms of your imagination, your creativity. So that commercial was a hugely popular. Of course, we know the success of Bill Gates and Steve Jobs, but given that Bill Gates and Microsoft was the first mover, they did enjoy huge first mover's advantage. And then within 5 years, Apple, Macintosh, Steve Jobs, they also, created a huge hullabaloo in the market. And that is when really, I believe, rather than 1978, 1979, it's when mid-80s, when we have both Microsoft and Apple, this third industrial revolution, Industry 3.0, started taking like a proper shape. And it went on. It went on for like almost 3 decades. Things changed. There were some incremental innovations, some disruptive innovation, but perhaps during that phase, we didn't have any other transformational innovation as such. Well, of course, there are those smartphones and everything. Oh, by the way, sorry, I forgot to mention. So the plan for today's lecture is this. So I'll briefly introduce you to these 5 industrial revolutions. I'll explain what is special about Industry 5.2, why we are moving into that direction. Of course, designing curriculum these days, you have to bring in academic research or even industry research from industry in the classroom. So I'll also talk about, as researchers, what should be our vision. So many researchers across all continents, what they're doing now. And then I'll talk about the agenda for redesigning the curriculum. I'll talk about what are the associated challenges. And since this is the age of Gen AI or AI in general, we need to give some additional thoughts. And I have some insights to share with you in that regard. All right. So that was Industry 3.0. And then starting from 2010, perhaps, that's when we see the prominence of AI. AI is kind of the buzzword that started flying around. And we also saw how smart technologies are coming up. It's affecting our lives. We have started seeing things like Internet of Things, right? So it's not just one separate, solitary technology. The goal was to, kind of take care of everything, right? So under one big umbrella, you have a system of smart technologies. So all these together defined Industry 4.0. And then, of course, as per many academics and some industry leaders, perhaps starting from 2020, and in my understanding, this research kind of got a push during the COVID years, 2020, 2021. That's when we the academics worldwide, we started brainstorming about Industry 5.0, and that is human-centric industrial revolution. So one might naturally wonder that, well, so why we're suddenly talking about being human-centric? So what was happening in earlier phases of industrial revolution? Well, so to understand that, we need to kind of look at what are the contemporary challenges, okay? But before we delve into the contemporary challenges and the directionality, let's talk about what was the relation between human and machines prior to 2020, during Industry 1.0, 2.0, and so on. And of course, I mean, industrial revolution is happening because of human, I mean, it is a real world. It's a world of humankind. However, at every stage, there were recorded human-machine confrontations. So during Industry 1.0, if you look at the very left-hand side, so this is representing a leader of the group named as Luddite. And so Luddite is a group typically in the cotton mills and spinning mills when, this industrial revolution, the first industrial revolution took place. A lot of things were taken care of by machine instead of human beings. This group, and they're typically the cotton mill workers or workers, putting manual labor in other sectors. It was a relatively small group, but what they started doing, they started resisting it. Initially, they started having discussion with the then political leaders and the industry leaders. Things didn't go their way, so then they became destructive. They started destroying, machineries. So that was industry. That was the confrontation during 1800s. 1900s. If you think about that, again, the great movie made by Charles Chaplin, Modern Times, right? So Charlie Chaplin, with his amazing skill, real artistic talent, it showed that, well, the world is moving in a very different direction, and many common people like us and laborers, workers, they didn't have much idea. Okay, they're just following the command, but they have the fear that things are going beyond their control. Of course, the pushback started happening, and that was the time, 1920s, 30s, when the whole concept of trade union became very popular. Then came Industry 3.2, the computer, digital technology, and then, of course, another movie, phenomenal movie, Terminator. That was the initial period when artists and writers and thinkers, intellectuals, they started thinking about what would happen when, is there a chance that machines would eventually conquer the world? And if that happens, then what would be the role of, human? And I mean, this particular concern was there throughout, and even now, of course, in a much larger scale, perhaps we are continuously thinking about this. Coming back to the Indian context, perhaps some of us who are old enough would remember that during 70s, 80s, even early 90s, in many cities across India, many states, there were pushback. There were political movements against adoption of computers in bank, for example, or public offices. Now, of course, there are political movements, and some people tried to exploit it. Some people had genuine concerns. Some people felt genuinely about, the fellow citizens. But the main point is here, throughout our civilization, with respect to industrial revolution, there has always been anxiety. Okay, And of course, there has been progress. There has been economic growth, right? Without industrial revolution, we wouldn't be here. As you know, like if you, the economic history, the real data shows that the general living conditions in almost all countries are much better compared to what used to be, let's say, 200 years back. But still, it would be very unwise and, of course, unempathetic if we completely overrule this anxiety bit, right? So the anxiety was always there. And we have to acknowledge that fact. So now, of course, the COVID happened. And even before COVID, right, people started thinking about this human versus machine. And if you go back to 2008, remember, that was when, so this is a contemporary time, that's when we realized a global financial meltdown, how devastating that can be, and how all countries, all economies, regardless of whether they're developed or emerging, are tied together. And then one bit of market failure in a country which is not even your neighboring country can wipe out your pension overnight, can wipe out your savings overnight, right? Thankfully, in India, the devastating effect of global financial meltdown was not that severe. It was there, but not that severe. But all around the world, people felt it. So when global financial meltdown was happening back in 2008, I was pursuing my doctoral studies at University of Washington. I was also teaching at Seattle University and Seattle College. And many of my colleagues, mostly the non-teaching administrative staff, their pension fund, their savings got wiped out again, really overnight. So it was a huge problem. And I know many people still couldn't come out of that shock. And perhaps whatever shift you have seen in the economic and political domain in the context of US, that 2008 experience played a crucial role. So people started thinking about, well, it's all about technology, it's all about market. And of course, the leaders will always tell you technology is here for you, the humankind. The market is for you. But what's exactly the role of human being, right? Doesn't it look like that we are really insignificant? We don't have much power, much control. No matter what we say, it doesn't get reflected, in the market mechanism. And that's when this whole idea of Industry 5.0 has emerged. And to be honest with you, and again, it's my own perception, that just idea-wise, it's still taking its shape, okay? It's still not final. We have some ideas, but it's still not final. So whatever research has been done, whatever dialogues we are having with our industry leaders or politicians, we know perhaps there are three main pillars of Industry 5.0. One is human centricity. The second is sustainability. And the third is resilient. Okay. Now, why this thing? Why we are suddenly moving in this direction? So, of course, people started talking about climate change in perhaps late 80s, early 90s. In 2000, when I was in the US, there used to be a lot of discussion, actually, many public interest groups are there. I know in India, things were changing. For example, some of my relatives used to live in Bengaluru. Many of my friends later moved on to Chennai also. And so these cities used to be great cities for living. And the same city, for example, like, I'm from Kolkata, Calcutta. Uh, Calcutta is one city which experienced this course of partition, and there are other problems too. But our wetlands are completely, being obliterated, right? If you think about Bengaluru, Bengaluru in 80s, as we all know, used to be a lovely green Indian city that other cities used to be envious of. And suddenly, with unconstrained growth, Bengaluru started saying, severe water shortage and everything, right? And of course, the heat is there, the flood is there, the cyclone is there. So the discussion about climate change was there. But then perhaps sustainability didn't really become a buzzword back then. But we realized now we are at a critical juncture, and we have to incorporate sustainability in our research, in our business, in our teaching. And then, of course, we need to think about resilience, because we know it's a historical lesson. I mean, this industrial revolutions, the consistent progress of technology, and this relentless economic growth, it's good, but it will not affect every part of society in similar way. And some of us will be hit hard. And if human centricity is really the focus of Industry 5.0, we need to think about how to be resilient, how to push back. So why do we see this change in direction? Because now we are dealing with some of the grand challenges, and some of these grand challenges have really become sort of existential crisis for the entire humankind. So of course, climate change is one. We now have not very new, but after 2000, there's this new terminology called climate refugees. So people, they're now losing their homeland. They have nowhere to live. So if you look at some of the Pacific islands, right? Some islands close to Australasia, they are now seeking refuge to developed nations, neighboring countries, just because their homeland is getting obliterated. Now, climate change, we all know, but personally I believe as important as climate change is another grand challenge, that is inequality. Okay. If there's 1% of entire world population, or not even 1%, perhaps 0.1%, if they have so much control over wealth, over political power, right, then how would that affect us? Okay, and us can be working class, us can be middle class, right, or us can be even the affluent class, right? So this sheer inequality has become another huge problem, right? So the global poverty, the lack of having dialogue in terms of what should be the ethical norms, right? Sometimes people just think we're just doing virtue signaling, right? But we shouldn't be afraid to talk about ethical norms, right? Because things are changing very fast. So then why we should stick to the old ethical norms? And these grand challenges shaping the direction for Industry 5.0. And again, I believe these three are the pillars. Okay, once again, human centricity, and I'll explain again later on. But human centricity essentially means that whatever we do, whatever system we build, whatever technology we are designing, the human self should be in the middle. That means whatever you do, your approach should be based on the welfare, the well-being of humankind. Sustainability Now, that's where the agenda becomes broader. Okay, so now we cannot be selfish. We cannot just, continue thinking about ourselves or our core family members or our friends or our ethnicity. Really, we really need to think about the entire humankind. And that essentially means we need to think about our society. We need to think about planet Earth. And as I mentioned, there'll be so many challenges, so many ups and downs. We will be down, but we need to know, we need to learn how to be resilient, how to, push back, how to come back. So now what I'll do, I'll briefly tell you from the research perspective, typically in the social science domain and in the management domain, how things are changing, how this grand challenge is reshaping the management research. So what you see here, some of the greatest thinkers of 20th century. And when we think about innovation, disruptive innovation, transformational innovation, we really can't think without them, without their feedback, without their input, right? So in the middle, you see someone who has been extremely influential back in his days and even now. Anybody wants to guess who is in the middle? Right. So in the middle, we have social scientist and thinker named Joseph Schumpeter. And Schumpeter was the idea that Schumpeter put forward in 1920s shaped many academic research, henceforth, and that's called creative destruction. Okay, so as I mentioned at the beginning of the talk, that innovations can be of various types, right? And depending on which textbook you were looking at, which journal article you were reading, you might even see there are classifications going like 10 types of innovations, 15 types of innovations. But to make our lives easier, to keep things simple, we can think, well, there can be perhaps 3 types of innovation. One is incremental. To give you an example, what you see Samsung and Apple, they are doing with their smartphones now, okay? Nothing majorly disruptive. The base model remains kind of same. They're just tweaking something. They're getting some feedback from the customers and just doing minimal, incremental changes. Because if you think about it carefully, a smartphone really changed our lives, right? And it was introduced in early 2000s. Steve Jobs was a pioneer with iPhone. But from the early days of iPhone to now, this is 2025, so 20 years almost, of course, things have changed, but not to that dramatic extent, right? Innovation can be disruptive. And if you think about this famous researcher, economist, and management scientist from Harvard, Clayton Christensen, he mentioned that in order to be disruptive, which is a disruptive innovation, a true disruptive innovation, then you need to think about whether this innovation has the prospect of consistent growth, and it has the potential of reaching all ends of the market. So typically there would be an incumbent who perhaps started at the low end of the market, but eventually it will focus primarily on the higher end of the market. There might be various reasons, but the foremost reason being they just want to get the cream of the market, because high end of the market, that's where you get the top willingness to pay, and hence the top price, and hence you, in terms of extraction of economic rent, it would be much profitable. But then there will always be a new entrant who will disrupt everything. Okay, so if you think about example of Netflix. So Netflix changed everything. Okay, so when they started, of course, they're just a DVD rental, but there is a bigger player like Blockbuster who had a huge name. Blockbuster was also doing DVD rental, but then Netflix completely changed the landscape of entertaining by introducing this streaming thing, right? And then, of course, in the initial days, they started at the low end of the market. That's when the price was relatively low. And then now Netflix has started, moving at the higher end. Of course, Netflix is still dominating because they're also putting a lot of effort and time in understanding how to make a disruptive innovation to the next level by making it transformational. So they didn't just stop at offering streaming. Then they started producing their own content, and that is now a standard model for every entertainment provider. And they just didn't stop there. Now what they're doing, perhaps some of you have Netflix account and you can check, it now gives you the scope of doing video gaming. And perhaps not many of us might know, but video gaming all over the world has a huge market. I mean, the computer gaming, video gaming, and India is catching up, quite fast, actually. Anyway, but the Schumpeter back in 1920 suggested that, of course, Christensen's model came in 1990s. Schumpeter didn't really talk about consumer segments. So disruptive innovation, as seen by Christensen, it's more about consumer segments, how to create opportunities. And that there is a prior research work which kind of shaped Christensen's work, and that is Michael Porter's 5 forces, right? But Schumpeterian work, again, from 1920s is very, very crucial, because Schumpeter suggested that in order to be truly great innovation, there has to be this creative destruction process, okay? And creative destruction process would have certain characteristics. What are those characteristics? That primary innovation will lead to many, many secondary innovations, okay? So the complementarities in terms of innovation. There will be a delay in productivity. Because it's creative destruction, so in the initial phase, you will see that the destruction bit, right? So it will reduce the productivity. And then later on, you will see a jump in creativity and more productivity. And perhaps if we believe in Schumpeter, that is where we stand now in terms of generative AI in general, because many of the white-collar workers are just going away. And even us, the academics, we are also under scope now. We can lose our jobs. Now, if we believe in Schumpeter, if we believe that AI, Gen AI, they're really innovations following creative destruction path, then that means we should be hopeful, because in few years of time, we might see newer opportunities and new jump in productivity. Now, what would that be? It's not very clear, and that's why most of us are perhaps panicking, right? And Schumpeter also mentioned that, creating network externalities is huge, right? And that's why, if you think about Industry 3.0, computer, of course, computer was there, but Bill Gates also introduced MS Word, MS PowerPoint, MS Excel, and every household, every company had to use it because of this network effect. Because if I'm writing something in MS Word, my friends, my family members, my colleagues, my collaborators, how would they read that, right? So they also need to have MS Word. If I'm doing certain computations in MS Excel, my manager, my collaborator, again, they need to have MS Excel to review my work or to work with me. So hopefully there will be a bigger network effect from AI too. And then if you look at the extreme right, the top part, So these are the images of this year's economics Nobel laureates, okay? And so this year's economics Nobel Prize was awarded to professors and Mukher, Aghian, and Howitt. And what they have done, they have shown that this path of creative destruction is hugely important for economic growth, okay? Of course, as many of us know and believe, that when we start thinking about human centricity, growth is not enough. And perhaps our country, India, is one big example, because I was just reading an article in Economist 2 days back, and the Economist has predicted by next year, India will be the 4th largest economy. Okay, I mean, we have seen some news even this year, but the Economist say the journal, the magazine Economist, is now saying it will definitely be the 4th largest economy in 2026. And not just that, it will be really, really close to the 3rd largest economy, which is Germany. And then perhaps in next 4 or 5 years, it will just be United States of America and China, ahead of us in terms of growth. But then when you start thinking about GDP per capita, when you start thinking about how we are doing in terms of our resources, infrastructure, everything, it's, without being political, it's fair to suggest that all of us would acknowledge that there is huge, work to do, right? And we are lagging behind. So yes, economic growth is important, but we need to think about human development too. But of course, many economists believe that the impetus that you need to really bring in the human development, the main engine would be economic growth. Anyway, that's a different debate. But what this year's Nobel laureate have suggested, that economic growth is phenomenally important, and true economic growth can be achieved with the process of creative destruction. But those are the ideas from last century. Even this year's Nobel laureates, Aghian, Howitt, Mukher, many of their most cited popular works were done in the very end of last century. But new generation of researchers, younger researchers, and perhaps you haven't heard of them, but and this is not an exhaustive list at all, right? They are bringing in newer ideas, okay? And these ideas together are shaping in today's management research. So for example, we have a very influential paper by Mazzucato 2018, where the author discussed about mission-oriented innovation, okay? So disruptive innovation might be just the first criteria for being transformational. For transformational, perhaps we need to look at Schumpeterian framework, we need to look at Michael Porter's framework, okay? But now this new generation of ideas suggesting that perhaps we need proper directionality, something like climate change. So whatever you do, whatever technology you bring in, whatever your business model, you must have that grand direction. You must have the direction coming from these grand challenges, right? And that in a way ensures both human centricity and sustainability part. Then another idea, transforming societal system. So throughout the 20th century, all the phenomenal theories that we have come across, big ideas that we have come across, often dealt with market, the imperfections of market, why might market fail, and how we can, transform the market, right? So varieties of new tools and theories have come in, new ideas, something like game theory, for example. It was an obscure mathematics branch, and then researchers in the domain of economics, management science, and even applied math, they have seen that game theory might have huge implication in correcting market failure, right? But now we're saying that, well, just paying attention to market failure is not enough. We need to think about transforming the entire societal system, right? And entire societal system means we need to think about societal surplus. We need to think about human well-being. We need to think about people who are perhaps downtrodden now, but how they can come back. Another really important idea is sustainable dynamic capabilities. And in the organizational behavior, in the strategic management domain, this idea of dynamic capabilities was first introduced by Teese and his co-authors. And dynamic capabilities suggested that in order to be truly transformational in terms of entrepreneurial activities, you need to sense that what are the opportunities lying ahead, but you also need to seize the opportunity. And you need to consistently transform yourself, okay? So very quickly, what does that mean? So you need to have an idea based on what market might want, right? Seizing means just producing the idea is not enough. You need to acquire huge amount of resources to actually implement that. So a great example was Kodak. Kodak invented digital camera in 1978, but nothing happened. And Kodak really lost the race of digital camera back when we were using digital camera. Now, of course, even the digital camera is gone. Because the stakeholders, the board of directors, even the CEO himself was not sure whether that was a great idea and didn't really acquire resources. And these days, things are much more complicated. Because if you think about resources, one of the vital resources is, of course, financial resources. And that financial resources is lopsidedly owned by venture capitalists, okay? And almost all venture capitalists, they have very similar background, they have very similar demographic traits, and that's why perhaps their preferences are also very similar. And that is why you will see that, even in last decade, so much money was pumping in fast food sector. Right now, 500 billions. Now even we are hearing trillions of dollars will perhaps be invested in AI. And yet there is very, very little amount of investment you will see happening in climate tech and so on, right? So seizing that opportunity is important. And then transformation, constant transformation. Netflix example that I told you earlier, they started with DVD rental, then from DVD rental to streaming, from streaming to own content creation, from own content creation to gaming. So that's really dynamic capabilities. But new generation of authors is suggesting that market opportunities, detecting that is not enough. You need to find what are the hindrances which might affect the sustainability, right? And while talking about sustainability, maybe we are talking about the climate change issues. Maybe we are talking about, the human beings. So for example, if Gen AI wipes out 90% of the white collar works, let's say in the span of next 5-7 years, what would these people do, right? If you're a middle-aged person, you can't suddenly learn the skills of plumbing or carpentry. And these are very, specific skills. And people who are plumber or carpenter, it's a sad fact that in India, perhaps they don't get enough value for their work, but these are really skilled people. You just can learn the skills easily. And of course, our specialization is in different domain, right? We might be teachers, professors, we are working in banks, whatever. But if these things are gone, then what would happen? That is also a sustainability issue. And in my mind, sustainability is not just about climate change. It's again about human beings. So the next generation of transformational innovation will not ask what we can disrupt, but what should we transform, right? So yes, creative destruction, if you still believe in Schumpeter, that's absolutely fine. But now you need to tie up those frameworks. It might be Schumpeterian creative destruction. It might be Michael Porter's 5 forces. It might be Christensen's disruptive innovation, right? We need to link these with today's grand challenges. Otherwise, we cannot survive. So these ideas are, of course, now shaping the the management research that's currently happening. So, for example, under human centricity, these are the new ideas that are getting prominence. Digital humanism, right? So, if you think about cybersecurity, data privacy, right? I mean, the big corporate houses, they have treasure trove of data on us, right? They have so much data on us. I mean, it might be a bit cheeky in saying that, but let me say it anyway. Perhaps they know you so well, your parents don't know you that much. Or maybe even you don't know yourself that much, because data really matters. And they have huge amount of granular data on each one of us, right? So how do you treat your customers, your digital customers, in a human way, right? Now, of course, we are living in the age of AI. We are using Gen AI all the time. And there is no, that's not an issue, because AI will be here. We need to adapt with AI. But we need to think how we can still be creative. And many of my students, in the UK, they come from all over world. I talk to my students from India, from Pakistan, other countries of, subcontinent, from Europe, Asia. These days, we are getting many students from North America also. And you wouldn't believe, many of them say that, I hate AI, The sad thing is you can't hate AI. You might dislike it, but hate is a very strong word in the sense you will shun it. There's no way we can shun AI, but we really need to think hard how we can still be creative even when AI is here. So human-machine interaction, another really, really important topic, right? So AI augmentation, right? I mean, if you believe in Schumpeterian framework, you will perhaps believe that AI is here to augment and not completely destroy. But what are really the aspects of augmentation? Now we think about sustainability imperative. If you have been to Europe, particularly mainland Europe, to some extent in the UK, this whole idea of circular economy is huge in Europe, right? So how you can ensure the production is happening in circles, so the input output. So you just you produce and you forget about it, you throw it away. No, right? So how you can use some of the output as your second generation input and so on. Of course, the idea is much bigger. There are many more aspects. I'm not going into that, but the circular economy is huge. Sustainable value network. And again, there are many, many aspects, right? So if you think about our smartphone, for example, and many other things, this AI chips, all of these require huge amount of very important mineral resources. And one continent which is full of important rich mineral resources and hasn't been explored to its full extent is Africa, right? And if we fail to provide the true value of their mineral resources to those African economies, it will not be sustainable, right? Because there will be perhaps revolution, coup, just in general chaos. People will suffer, and that will definitely affect the sustainability of the value network, right? It will affect the logistics. It will affect the operation management. Carbon reduction, right? Is there a way we can do? I mean, and as you know, that we are doing a terrible job in terms of have a political consensus, and the COP30 is happening right now, and now the leaders are talking about, they have realized that we couldn't reach the goal that was set perhaps back in 2000, and there's no way we are going to fulfill that goal soon enough. So now we are talking about adapting to the current situation and not making it worse. I mean, that whole approach, that whole outcome is quite sad. And so now we need to think about, in terms of innovation, what can be done. So, and of course, so all these resilience imperatives, how the organizations, human beings can be shock ready and all that. Now, these are very important ideas, because we need to bring in these ideas, to our classroom, because the academia is changing. And if we need to survive, if we need to see that our future generations are learning, and not every one of them would want to be just content creator, we need to make academia exciting, practical, and thought-provoking, right? So I think just today in the morning, while I was preparing for this lecture, a news came to my attention, and it seems that in India now, more than 80% of Gen Z students, they identify themselves as content creators, and that's what they want to do, right? And the trend is even more prominent in tier 2 and tier 3 cities, apparently. And this is just one report, right? But if that happens to be true, I mean, I have nothing against content creation, but we still need good researchers. We still need good industry leaders. We need, good business people, businessman and woman. We need good political leaders, all that, right? So, and they need to be taught by us, but they will not come to us, because right now everything is on YouTube, right? And if we keep doing the stuff that we have been doing for 30 years, believe me, there will be no universities and colleges left. And we are in the UK. I can speak on behalf of my institution and what I see in my surrounding. It's a huge threat now. I mean, the reduction in student, and even when they're coming, the general interest is lacking so much. It's a huge concern, right? So we need to make it realistic, exciting, intriguing. Before I start talk about the curriculum, what we can do, let me quickly tell you how things are changing in the domain of marketing, strategy, operation management. So what we see in the industry. So now we see in the industry, I mean, because AI is here and the Gen AI tools are mostly very cheap, if Chinese companies like DeepSeek can progress further in the next few years, and I know there are some really interesting startups in India, if they get government backup and more investment, they might also do wonder. So then the cost of AI would come down to a great extent. And if that happens, this will be quite common. What I'm talking about, it's hyper-personalization, okay? So every ad that you see, it's just for you. And that is perhaps happening in terms of promotion. But if you think about product design, it's still not happening, right? If you think about retail, a retail channel just for you, it's possible, right? A product which is customized just for you, it is possible. And AI can help us in that regard. And product, you can take it in a, I mean, you can think about it in a bigger way, in the sense that it's not just an iPhone or something I'm talking about, like, durable goods. How about a health plan? So the cost of medical treatment, the health plan, is huge. And I'm not talking about US, I'm talking about India. Okay. I mean, all of us, we know that how this treatment cost is going up. And with the help of AI, it is possible to have a concrete prevention plan for all of us. And if that happens, we perhaps don't need to spend too much in treating us, right? So prevention would be much useful idea rather than, the treatment. So this use of AI and hyper customization is everywhere. Okay, so for example, Nike is now letting their customers design their own shoes, and it is possible you design your own and Nike will get it for you, right? And it has been hugely popular in North America, particularly in the US. And then there are various other ideas. For example, this Dutch retail brand Aldi, and Aldi has presence in Germany, in UK, in other European countries too. They are now using their customer representative voice, right? So automated voice control. So it's AI generated, but it's based on their own employees. Okay, so they have created experimentally, they have created a voice by using 10 of their employees' original authentic voices, right? And that has really become hugely popular in Netherlands, at least, because earlier it used to be kind of very robotic voice and people didn't feel any engagement. They knew at once that this is a machine, but now things are changing. So as you can see, in terms of marketing, in terms of strategy, in terms of operation management, logistics, there's a huge technological shift. So academically, what we can do now, if you look at all these very fascinating, fancy technological shifts, and once you realize that we are not talking about, fiction, this is actually happening now in reality. All might look hunky-dory, all might look very rosy to us, and it is very easier to be carried away. But as academicians, and yes, we are in the business school, right? When we write papers for journals, unlike other social science disciplines, we have to keep one section called managerial implications. But at the end of the day, we are still academics. We are still, teachers like others who are teaching chemistry, biology, mathematics, Tamil, whatever, literature, right? So we need to think about the bigger picture. We need to educate our students. We will, of course, tell them how the shift is happening, but we need to teach them to think analytically, right? So this progress of AI, it's fascinating. And again, going back to Schumpeter, let's be hopeful. Perhaps it's creative destruction process we are going through. In few years of time, there will be real boost in productivity. But we need to be analytical here. We need to examine whether this productivity will reach every corner of the society. Because when globalization happened, back then, so like, early 90s, 2000 throughout, I was a student in 2000, late 90s, and this trickle-down effect, this phrase used to come back again and again in media reporting, in intellectual discussion. The idea was that globalization would ensure that the wealth would trickle down to every bit. I think it's fair to say we know that that was not the case. It trickled down to perhaps the middle class, okay? But it really didn't trickle down to every section of the society. It really didn't trickle down to the marginal section. Of course, we'll have some examples all the time when, you know, the students, they overcome all sort of barriers, and, you know, from that marginal section of the society, they have pushed back. Now they're doing really well. They have perhaps, you know, progressed, and they have taken their family members along with them to the so-called middle class and so on. But if you look at the numbers, it's scary, because even now the malnourishment, you know, even now the really pathetic living conditions, these are true for so many of Indians, and they are our fellow citizens, right? So we need to be analytical here. So we need to tell our students that, okay, AI productivity, what is there any trickle down effect? If not, what can be done? We need to think about filter bubble effect. Okay, so the image that you see on the right hand side on the top, that symbolizes the filter bubble. Okay, so in 2025, and this is happening not in 2025, of course, this is happening for past 10, 15 years, this propagation of fake news and misinformation. And we now know that, again, there are various factors, but what the technology has done, the technology has put us in our own bubbles, okay? And we are perhaps alone, or if we are not alone, we just live there with people who share exactly same ideas, believe exactly same thing. So even when I am rational, I'm a rational person, if I see 10 people from my bubble are sharing same thing, discussing same thing, right? So it's like a cascading effect. I might have a prior belief which would have contradicted what they are sharing, but now because people who are exactly like me, I feel comfortable with them, they're telling me something, and so there's a cascading effect, and I completely, you know, forget about my own prior belief, and I just go along with them. That's a huge problem, right? So all this hyper personalization, it is great. If we get promotions like ads, if we get retail channels, product design just for me, it's great news. But at the same time, we need to be worried about how hyper personalization has potential to put us in filter bubble, right? And then, of course, because we are living in the age of Gen AI, we need to connect our heart with brain. Why? Because empathy now will be extremely, extremely important. And that is why perhaps you see so many of Indian education leaders these days, for the last 2 years, let's say, are really focusing on the importance of liberal art education, because liberal art education does that, okay? And it's very interdisciplinary. So I'll come back to a bigger agenda, but it's also important that as a researcher, and hence as a teacher, you need to think about the right methodological expertise, right? So, I mean, in India, for example, if you come from engineering background, or if you come from economics background, you know, commerce background, we have been trained to think, you know, if you're good with numbers, that's it, right? That's kind of represent the macho version of you, right? And that's so wrong at so many different levels, right? And of course, now AI is here, right? AI is doing so many things. Coding is becoming obsolete, right? Analytics is becoming obsolete. But the point is, data will still be there, right? And we also need to train our students to examine that data, to challenge everything, right? One of the really big problems in academia, and this is not specific to India, it's everywhere, because, you know, I am from India, I teach in Indian universities, colleges, I taught in the United States. I was in Istanbul for a few years. Now I'm in UK. And as an academic, I have traveled all around the world, taught in many other countries, and it's same. But students, they don't challenge anything. They take everything for granted. And I used to be like that. But who is writing the book? It's being written by a human being. I mean, maybe that person is an expert. That person has many years of experience and expertise, but it's still human being. And, we should always have discussion, right? So it's very important that the students become analytical. They start questioning things, right? And now, perhaps, yes, big data will be important, but in terms of analytics, perhaps our students will not do much because AI will take care of that, right? So if you think about because I'm a quant person, I teach statistics, and if you think about if you have ever taken any statistics course, early 90s, 2000s, right? A lot of times we had to do all the computations manually, right? And then, of course, we had this very powerful software. You don't do any computation on your own. These days, we just focus on interpreting the output. Similar thing, kind of. So the analytics parts will be taken care by the machine, but we need to examine the data. We need to question the data. We need to understand, can we go more granular? Or if we go more granular, will there be cost of dimensionality? So that's one side. And the second side is, that is where the qual colleagues will be extremely helpful, creating narratives, something like narrative interviews. And it's very, very important. And I'm not just saying to keep a balance. No. As I mentioned, I'm the program director here. I need to think about the placement of my students. I'm constantly in touch with current students, alumni. And you wouldn't believe, at least in the Europe and UK, there is a huge market for qualitative research, even now. And many of my students, alumni, actually, they believe this market will grow even bigger. And I think, unfortunately, majority of Indian students, average Indian students, regardless of their backgrounds, by the way, they lack, these skills, right? These qualitative skills. And those days are gone where you can expertise in quantitative skills or qualitative skills, right? So now we need to bridge these things, right? So you examine data, you analyze it, and then you figure out how you need to create a really important narrative out of it. And if you think about it, it's not like completely new, because all the C-suite executives, they always cared about the narrative, right? So the data part, yes, the analysts are there, but the C-suite executives, the CEOs, CMOs, CFOs, they really care about, right, the main narrative, And it's also very important in the context of our curriculum, we need to examine the age-old norms. And what does that mean? That means we cannot keep shifting goalposts. Unfortunately, this is a huge problem in today's academia, and this has been happening for, I don't know, maybe 50 years. To give you an example, if you're writing a paper, and I have seen so many times, to be honest with you, in close quarter, in close circles, that you run experiment 50 times, and one time you get significance, p-value is less than 0.05, and you write a paper, and that paper even gets published. That is so unethical. We just can't do that. And again, the modern researchers, contemporary researchers, in the context of the statistical significance, they're saying it doesn't make sense that just randomly set p-value will tell you whether something is happening or not. You need to have a much broader and much robust framework to examine statistical significance, right? So you need to look at effect size. You also need to think about confidence interval. You need to worry about how many times you are getting the statistical significance when you are running the experiments. So this just cannot be the case that you run experiment 50 times. One time you get lucky and you write a paper, right? And we have to teach our students that, because, and these things have real life implications, because 2008 global financial crisis, that was a hugely devastating affair for most of us, if not all of us. And there are varieties of reasons. One reason was the financial models, right? It looked very fancy, but at the core, it was empty. It was using really fancy assumptions, right? And this arbitrary p-value, and perhaps you have just 100 data points and you're assuming normality. So all these things must go away. So curriculum-wise, what we are missing, right? So broadly speaking, right now, this practical employability has become a huge issue. And again, you might disagree with me. I'm just talking from my perspective. This is where our university is going, and some of the other British universities. So we now constantly need to think about the skills. So knowledge is base. We cannot ignore knowledge. So theoretical knowledge is still be there. The students still need to understand what did Schumpeter suggest, what did Christensen suggest, what are this new generation of theoretical researchers talking about. But in a way, we need to ensure that is also leading to some proper skills, right? And I have touched upon some of the points. I just talked about the methodological expertise, for example. It's also very important we start talking about ethics. Now, some of us might believe that, well, it's a given, right? We have to talk about ethics, but you will be surprised to know, and there are some data from higher education literature. So few schools, so few colleges and universities, and so few of us, we actively talk about ethics, right? And again, 2008 financial crisis was a huge lesson. And when we're talking about Industry 5.0, when we're talking about human centricity, when we're really worried about fake news, misinformation, doing bad, unethical research, we can't ignore ethics. We have to tell them again and again and again what is right, what is wrong. Sometimes they may say that, well, there is no such rules and regulations. And that's when we need to go back to the process of creative destruction, because one of the characteristics of creative destruction is that there would be new societal expectations in terms of ethical norms. So sometimes, not sometimes, most of the time, the governments and organizations, they struggle to deliver in terms of implementing, in terms of coming up with laws and implementing that. Well, that's government, we all know. But then in terms of expectation, societal expectations, we need to talk about that. Maybe that's the expectation in 2025 and 2030. It's also very, very important that we start making our curriculum interdisciplinary, okay? So you might remember a few minutes back, I was talking about the liberal arts education. And one of the real advantages of liberal arts education, it's really, really interdisciplinary. And in India, in UK also, right, we have very, very few institutions which truly have interdisciplinary curriculum. But we are living in such a complex world, right? And here, perhaps, I was looking for a picture which can symbolize what I'm going to say in that regard. But it's not just about pure science, natural science. Everything is interconnected now. Politics, sociology, philosophy, economics, natural sciences, cognitive sciences, engineering. And that is where the top brass of the institutions, the vice chancellors, the deans, they have to be really visionary. So the junior faculty members, even the senior faculty members who are not an administrator. So let's say there are some senior faculty members who completely devote their time for teaching. Or maybe in some institutions, we have faculty members who only do research. So this will not be part of their work, but it will really be the part of, the top decision makers, how we can modernize the curriculum in the sense how we can bring in this interdisciplinary touch. So that would be very, very important in the context of Industry 5.0, because we are talking about human centricity, we are talking about resilience, we are talking about sustainability, and sustainability is not just philosophical aspect, right? So much engineering and natural science innovations related to natural science are happening in the field of sustainability. Resilience, right? You really can't ignore the economic research, the empirical economic research to understand when and how common human being can be resilient after having an economic shock. And as I mentioned, so all these challenges and ethical issues, these are not just virtue signaling, because these are affecting us on daily basis. So for example, this algorithm-based advertising, right? This is creating havoc. And so many of us, we don't understand how this thing works, right? But maybe I was just talking over a phone. I was just talking, right? Not even writing. I was just talking and saying, well, I want to pursue a law degree. And then suddenly you go to your email account and you see an ad saying that, well, here are some of the universities, colleges near you which are offering law degrees. So understanding that and understanding the mechanism, understanding the ethical aspects, understanding the challenges, understanding the design, why these social media platforms cannot tackle it, right? And increasingly, we now know that it's actually technically impossible for them. And why, I'm not going into that discussion, but you can Google it. There are now some really interesting discussion going on. Many researchers are now suggesting it's a hopeless task if you want to prevent fake news or misinformation. It will be there, okay? But what we can do, we can design the platform, we can redistribute the resources in that platform so that we can address the root causes, okay? And try to do our best. So these are important management science, curriculum related discussions, right? Bad algorithm. So here is one example on the left-hand side, and this coming from research done by some University of Chicago researchers. And they showed how some algorithms, they undermine the health impact on African Americans. And it's not that whoever is in control, like, the local government, the councils, it's not that they're racist. It's just that the training data was meager, very minimal, right? Of course, one might ask why for African Americans the training data was so low. Was there any bias? I don't have that answer, but it is possible that without having any ulterior motive, things can still go bad. Without having any external motives, things can still go bad because we have, bad algorithm, bad training. Okay. And of course, sustainability should be at the core in our curriculum. And again, this is very important because some of these companies, they are now going through this unconstrained growth. And in turn, they have so much power, it's unbelievable. And it's very, very scary. And if your students say that, well, I feel scared, don't just laugh it off, because it is scary even for more matured adult human beings. I mean, some of you perhaps seen that, watched that, fantastic movie by Stanley Kubrick, Dr. Strangelove. So here's this mad scientist who wants to launch nuclear bomb in USSR, and it's a satire. But the thing is, some of these corporations have so much data, so much power, and in these days, data is power, right? If there is a Strangelove, if there is a mad CEO, they can create havoc, right? And we need to examine, and the next generation of students need to examine what to do in that regard, right? And these, in my mind, addressing this inequality, the disproportionate power, that is also sustainability. And of course, there are the more literal aspects. For example, this new innovations like bitcoins, like based on blockchain technologies, it consumes so much electricity that as here you can see that the Bitcoin industry, the aggregate electricity consumption is more than most of the countries' electricity consumption. Same with this LLM models, GenAI, ChatGPT kind of tools. It consumes so much water, right? So these things are huge, and especially when we're dealing with climate change, we cannot fulfill our goals, and these new technologies, gobbling up so much of our natural resources. It's a huge thing. And we must have discussion. Our curriculum must have this discussion, right? So here's a 10-point agenda. What can be done? And of course, these are just some suggestions, and these are based on what we are doing here, okay? So human-tech complementarity, of course, if we believe in the path of creative destruction, we know AI will be here, right? The machines will be here, but together how we can work, right? Interdisciplinary, extremely important. The cooperation bit is extremely important. Now, since we are talking about universities and colleges, we need to think about assessment. As you already know, because of the GenAI tools, giving something like like writing a report or take-home exam, those kind of relatively innovative ideas are now gone, right? And so we are now stressing, we are now brainstorming on how we can do co-creation of assessments, and co-creation both from supply and demand perspective. So I am designing an assessment. It's not just my work. We are doing in a team way. And perhaps in the near future, we can ask the students to, to do those assessments in team, right? Practicality, like as we say, like, the first-hand experience with data, not just theories, right? So sustainability, ethics at the core of our, maybe at the module level, or at least at the program level, it should be at the core, right? Effective learning, right? Action-based learning, that one-sided lecture, that is gone. It should be two-sided way. And here's a thing, like, this, remember the Gen Z people I was referring to earlier. So 80% of them want to be content creator, and I didn't know that, and I don't know how many of you were aware of that, but it seems that there is a gap, right? There is a generational gap. We don't know what are their goals, how do they see their world, right? And that feedback must be incorporated, okay? And because many of our next generation students, they're losing interest because they feel they're, even when they have a voice, it's not being incorporated, it's not being implemented. And then they think, well, I can go to YouTube and I'll find everything, right? And of course, it's very important, the resilience bit, right? So we need to teach them so that they can be resilient. So right now it's happening that, you graduate even from a, really reputed British university. Earlier, my students used to get placed really easily. It's getting very difficult, right? But they must have confidence. They must have training. So confidence cannot be baseless confidence. So the confidence must come on the basis of proper training, right? Of course, there are challenges. What are those challenges? First of all, and we have to acknowledge that faculty capabilities, faculty skill, faculty knowledge. So faculty development is essential, right? As we know that until our death, we keep learning. And this is not just a saying just for saying. This is true, right? So we have to be equipped. We have to, even those of us who might not have time for doing active research, at least we can, read and we can see what's happening in academic research. We take few extra steps to understand how those academic research might be shaping industry ideas, how industry and academia are collaborating, right? Another challenge is administrative bottlenecks, and there are so many issues, and again, I don't have any answer. I'm not a dean, or so the senior administrators, they exactly know what are the challenges, but I feel the senior administrator at least should be aware that our curriculum needs a huge overhaul, right? Of course, institutional resources would matter, right? When I'm thinking about co-creation of assessment, designing new modules perhaps, or revamping the existing modules, we might not have resources. Again, if there are not resources, I mean, that's not okay, but we can't do much as academics, but at least we should understand that we cannot do this because of lack of this and that resources, right? Assessment reform is very hard, I mean, our mindset is like that. I mean, sometimes in past years, I used to give like a complete open book, open note, open internet exam. And many of my colleagues wondered actually, like, is that a real exam? What can happen? And so we can come up with new ideas, but you really need to have many more people on your team. You might have a fascinating idea, and maybe it's true that you are the genius and people are not realizing your potential right now, but you must have many more people on your team. And of course, as much as possible, we need to go against some of the cultural biases, right? The stereotypicalities that, well, Indian faculty members and Indian students are much more comfortable in this format, in this setting. We have to overcome. We really need to be, maybe I never traveled the world. I've never been to outside of India. That doesn't matter, right? We are truly living in a connected, absolutely hyper-connected global world, and we need to have that mindset so that we can overcome our local biases. What is literacy in the age of AI? I just have, 2 more minutes. So we need to think about AI literacy. Most of the companies here who are posting jobs, all of them are asking for some level of AI literacy. And in fact, I know many of them don't even, if you ask them what is AI literacy, they might not have a good answer, right? But at least our students should know what is AI, how AI is affecting different corners of life, what are the limitations, what's the impact, what are the challenges, how we should examine. The data literacy was there earlier, but we still need to teach our students. It might be quantitative data, qualitative data. Ideally, they should know both type of data, and they should understand how to collect, interpret it. For the time being, perhaps they should still learn how to analyze it, so they have some solid technical skills. But I believe in 3, 4, 5 years of time, it will be more of examining the data, challenging the data, right, and creative the narrative out of it. And of course, the critical literacy. Our student must be analytical. Our students must have the confidence to examine and to question. Okay. And coming back to this Industry 5.0, one of the expectation is, if you think from the industry perspective, it will give complete new value propositions. And here are some examples. For example, when you think about retail, retail is just selling of goods, buying and selling of goods. That is gone. Now the AI-based retailers like Amazon, they are just saying, we are here to give you more time. And if you go to Seattle, San Francisco, there are some stores where, you just go, you pick something, you pay, you come out, there is no one, and things happen so fast. Of course, many of us like human to human interaction, some of us might not, but the point is these are completely new value propositions, like the healthcare, right? So with healthcare, now we are talking about prevent and not treatment. So prevention, that's a completely new value proposition. And all this value proposition must have human beings in the center, and our students must understand that. And lastly, Industry 5.0, here are some of the goals that would help us in dealing with the grand challenges like energy conservation. Of course, AI is currently taking up a lot of energy, but it can still help us in conserving energy. It can help us in creating higher societal surplus, right? So it's important to understand what are the goals, in the future goals. So that we need to teach our students. And lastly, we need to bring in hybrid skills where human and machine would matter. Human empathy and machine efficiency, right? Together, that's a hybrid skill. Then why? Human beings can ask why. So we can focus more on the causality. On the other hand, machines, at least for time being, right now, the machine can't explain the causality. They can just give you the final outcome. They can explain how to do certain things. They might not be very good in explaining why. So that why and how. And then lastly, so machine can recognize a pattern, but we can tell a story. And these things must be part of our, new generation management curriculum with respect to this reference point, which is Industry 5.0. So that was it. If you have any question, please let me know.
Participants, do you have any queries or questions?
Yes, sir. So good evening, sir.
Hi, good evening.
Sir, this is Grace Anthony, faculty from Coimbatore Institute of Management and Technology.
Hi.
Sir, I have a question related to generational gap. You were talking about, of course, yes, there are generational differences among the faculty and the student. Sir, in your perspective, the generational gap at UK, because you're from UK and you handle the students at different perspective and different disciplinary also. So how do you manage the generational gap in your university, sir?
Right. No, that is a great question. And actually, because that in the UK, all the master's programs are now 1-year program. We don't have 2-year-long program. So why I'm saying this, that we don't have much time. I mean, as a program director, I am perhaps in a better position compared to my other colleagues who are just teaching, right? Because I spend more time with my students. So that's one thing that, we need to spend more time with them, ideally. And the type of generational gap, for example, I see students, regardless of their, program, they might be in MBA, they might be in MSA in marketing or MSc in business strategy, entrepreneurship. They keep thinking about entrepreneurial activities, and I see this happening after COVID more and more, and I'm getting more Indian students actually who are thinking about doing something on their own, who might have a small family business and now they just want to come back to India and, do it in a grand scale, bigger scale, at least that's their hope, right? So one change is that, I mean, we often just believe, even now, that they are there just to get a better job. But I definitely see a shift there, right? So they want to do things on their own, but they have no clue, right? And that's where our guidance would be really, really valuable. It's also important that, and it's a struggle, honestly, especially when you think about a one-year program. My students, they keep telling me they need to see something, let's say on family business or sector specific, like pharmaceutical and all that. So it seems that regardless of their disciplines, they want to have some specialization, like specific skills, and at the same time they want to do things on their own. So that ambition, right, I believe not many of us are, well versed and even aware. So that's one thing. The second thing is, often what we see that they don't speak at all, they don't communicate at all. And many of my colleagues, they complain. I used to complain, honestly. But later on, because as a program director, often I don't teach them anything, and my job is to just look after them. And they're really smart people, actually. Yes, sometimes they lack certain skills. For example, after COVID, I see many of my Indian students forgot how to write an essay. Some of them started doing, in bullet points, which is bad. So, but that goes back to what's happening at the school level. But the point is, they are smart people. They are not talking because they feel this is boring. It's not catering to what they want, right? And that's the thing I'm talking about. I mean, I'm not talking about generation gap in the sense that there's an age difference. I'm thinking that we might have a bias, maybe a typical mindset, and that's not going hand in hand with what they want, how they're perceiving the world.
Thank you so much, sir. Your inputs are really valuable. Thank you, sir.
Thank you.
Thank you, sir. As we conclude the 13th session of our Atal Online Faculty Development Program, it is my honor to deliver the vote of thanks for today's insightful session on redesigning management curriculum for Industry 5.0. On behalf of the organizing committee, faculty, participants, I extend our deepest gratitude to Dr. Prabhendra Chatterjee, lecturer in marketing, Cardiff Business School, UK, for sharing his expert perspectives and practical guidance. Your session emphasized the vital need to rethink and revise our management curricula to meet the demands of Industry 5.0, balancing digital intelligence, human-centric thinking, and sustainability. Your real-world insights and innovative strategies have challenged us to become future-ready educators, equipping learners with the skills and mindset required to thrive in the industrial era. To encapsulate today's theme, I would like to share a quote by Alvin Toffler. The illiterate of the 21st century will not be those who cannot read and write, but those who cannot learn, unlearn, and relearn. Thank you also to our program coordinators, technical team, and all participants for your enthusiastic engagement and support. Once again, thank you, Dr. Chatterjee, for your valuable time and inspiration. Let us take forward this lesson to reshape innovative human-centered management education for the future. Thank you.
Thank you very much. I wish a great day to all of you. And I'm on LinkedIn. If you're there, feel free to connect with me. Let's build the network, as I was talking earlier. So again, good evening, and it was a pleasure to be here. Thank you.
Thank you, sir.
Thank you, sir, for the wonderful session, sir.